Oh, got to turn on the light. There we go. All right, hey traders. Okay, so let's take a look at this. I made a mistake. I totally messed up this morning. I think I just wasn't on the ball. Okay, so we had this push above that gave us our bearish signal here. And I was complaining this morning that the volume didn't quite line up. You need just 1-1, so it looks like that. A 1-0-0. My son lost TV this morning. So he's waiting for 1 o'clock before he gets TV again.
Makes 10.
1-0-0 makes 1 o'clock on a clock. Yeah. Okay, so I was complaining because this pushed up gave us a bearish sample with the volume, and I didn't like that this sample here pushed down and didn't give us the volume lineup. Well, you can have the samples show up and then it waits until later to give you the volume. So I made a mistake here. That was my bad. I was waiting for another sample that had already showed up, and it was unstructured, but it did show up. So we did have the bulls show up this morning, and we got some teeth on that bullish position where it pressured them, but it didn't totally wipe them out. So their stops are probably going to be somewhere down here, or if they're wise, their stops really should be down here or insured with options. So they did come in. We did have bears right here, so we got our bears. Cut it open.
So pop out. Oh, thank you.
You're welcome. So we have our bulls and we have our bears. They showed up this morning. I missed that. It's my bad. I don't think I was quite awake. Maybe the Red Bull hadn't kicked in. And it needs to. So at this point, we are actually further along than I was thinking. The first thing, of course, that this market did, as soon as I finished streaming, which is like here, we saw the bulls able to push this up higher. It took out those stops that were, oh, sorry, not right there. They were hovering right about here, the ones that we've been tracking since yesterday for these guys and these guys. It was able to come right up, hit those stops, and just take a look. I mean, just look at tension. I mean, bears, if bears want to defend this or whatever, or get something going, they're going to need to do much more than this. Over the past week and a half, the best we saw was this. This was absolutely the best. No, not really. No, none of this. You know, we tracked it. We walked through it. This was the best. The reason that this was the best work that they've done is because it did some work. Work is a big deal. You got to know what work is. Work in this instance was they were able to get tension through zero. It takes work to do that. Usually when you pump tension, and they did this yesterday, we had some positions here that got moved out of the market, liquidated. You have to push out your opponent, and that takes work. It's a fight. It's difficult. And that's what pumps tension down. That's the best work we've seen them do in a while. They haven't been able to accomplish a whole lot. So this was some good work. But the problem they ran into was that later on in the day, through here and through this section, they haven't been able to trap in any bulls. You know, they were hoping right here, the bears, I think, were hoping to find a bullish position and then see if they could get that underwater and pump it further. And they just couldn't pull it off. And I think what happened was this morning, the bears came in here with a sell. And we were looking at this going, yeah, they failed. They failed to pump tension at all, to do anything, which means what this means is that those bears were little. They couldn't go across the whole stock market. They could only get a little position. It was nothing. It was just like small fish. I don't care how many shares they traded on the SPY or whatever. It doesn't matter. They weren't big enough. Then coming up, and I'm tracking this one as the bullish position, they were able to successfully impact tension. And I'm sorry, again, I missed that. I'm actually a little irritated at myself for doing that. But they successfully, you know what? I think that, let's see, I need to copy this. Hold on just a second. I gotta put that out here so that are, there we go. All right, so they were able to successfully pick up a position. The bulls were able to impact tension, and we could see that here. And we had some teeth on that position. Those teeth pressured that original position, the root position here. And that's okay. I think the origin of this second leg is here. The actual whole entire trend is going to be somewhere else. But I think this market is treating this like an origin. It is the position that's going to be built onto with spots like this, and this is going to be root number 1. And it just pressured this first root position, and it wasn't even that aggressive. It came right back out of it, and now we're just moving up. We hit the first level, the first set of stops, and you just look at how price reacted to hitting those stops. It just nailed them and paused. Looking at the next, we have the next set of stops that I've been tracking here for the traders who are playing in here. If they didn't dump because their position was upside down or whatever at some point throughout this day, then their stops are most likely going to be up here. We didn't get them on this day. We hit the market maker inventory on this expansion bar. That's not stops. That's market maker inventory. I'm certain that a lot of people bailed on their position when they saw the market gap up the next day, and that's terrifying. So I'm certain a lot of people did dump, but that's where the stops will be, is up here. So right now, what I'm looking for to see happen, this is our bag holder. If they put their stops up there, that's okay. Then they likely just got liquidated here. So the question is, where are more bears? We need some more. We need more bag holders. That's what we need. We need some more. Where are they at? Well, to sample your bears, you got to have a sample from below, like that. So it'd have to be a switchback where you push through, then come back. There'd be some there, and also decay right there. Are those reasonable? I don't actually think so. So let's take a look at another option that we have here, which is a little more complicated. And I was looking at this and I was thinking, if we scroll way back here and we just sort of take a look. Oh, you do. This high right here, if you look on decay, it's about 24 or something. I wish that it would say, like when I put it right here, it would show on the other side the actual. It was like about 24, 23, 24. This is the highest decay spot we have in a while. So if you notice right here, it's not too far off. 23, 24, probably. Let's see, let's scroll this down so we get a little bit better look here. Okay. So a decay retest, I'm gonna get nice and close. We'll get a little scroll back there, take a look. So yeah, about 23. And you take a look here, there's definitely, it was very close. This is difficult to see unless I like span it out all over my monitors because I don't know, you can't compress it. So we have this decay retest that's right in front of us, or likely just sort of gave us a little test there. This is the only place I can really see where bears could come in. And looking at the way this is all set up, if I'm thinking about it from here and here and here and treating this all like one big switch, yeah, I think the bears do want to participate. So the things we need for a decay retest, and I'll itemize them here. We need the signal, which is retesting a previous significant value. Okay, so significant means it needs to be an actual pivot, not a little tiny bump in the road. So the high of the previous day or the low of the previous day, or if decay pushed all the way down and then came back up and came and retested, I look for the significant retests. And it's up to you and your discretion if you want to look for smaller things. I personally don't really track those. I track the more significant ones. So multiple days in between. It's the only thing I can find on the chart. That's why we're looking at it. First, you need a signal. Then you need volume. So you're going to see trapped orders show up. Maybe some volume that's the right color for the trade. 3, you need the high-low index to show something here, the new extremes. You want to see the market lurch in your direction because this is looking again at all the stocks. The volume is all the stocks. The decay is a measurement off all the stocks. These are looking at the index, not the yeah, so we need to see the stocks lurch in that direction and then that lurching forward to say, okay, we're seeing some activity. So you want the high-low, and then of course, number 4, you want a price response. And then of course, the 5th thing that you know about this is that the stop is just beyond the signal. Price. Okay, so in this instance, if we have one right here, then the stop is just going to be right on the other side of that. That's just how it works. You to get a decay retest, you expose where your stop is to get a little kick in your trade to see if you can get something going if it's your final and only option. And remember, we need to see that so for this, if this is the bears. Oh, I don't want to squish your goo. That's like weird goo stuff. I don't want to squish it. The bears need to not have any other options, so they can't have any place for liquidity. I'm gonna squish it a little bit. Is there a marble in there? Ugh. Ugh. The bears need to have no other options. They need to have shown that they want to play. You don't want to try and catch a decay retest for a participant who clearly isn't interested in participating because it's a little riskier. And it needs to have all the pieces to it. So I think the bears seem like they want to play. I think since over the past couple weeks we've seen, I think they do want to play. So I think this is going to be a spot. Okay, so here is some volume, which looks like it finished up. Yeah, it finished up before that we would have had a sample. So the volume here is going to have to be this one, which is after what would be a retest here off of that way back there. Seeing some lurching forward, and we have a bit of a price response. The stop loss on this is going to be here. Now, this is a concept that you have to wrap your head around when it comes to how to generate liquidity. Here we go. If you want to generate liquidity, you can take it from, the broad market, which is the most popular way to do it. Or if you can't find any of them, take it from your friends. So if price pushes up and hits that, this spot is a nice spot for some liquidity. The sellers are buying out. A broker can package and sell that. If the broker sees that, you're short 100 contracts and your stop loss is up here, the broker can call up his buddies and say, hey, we got 100 contracts at price X. Do you want them? Yeah, if you get up there, I'll take them. And then price does this little wiggle while that they do deals and they make phone calls and do the handshakes. And if people want the liquidity, then we'll move up and grab up that liquidity. As far as the broker's concerned, they're just interested in predictable. And what they're trying to predict is open interest. So you created a contract with the market, you signed up for all the risk, you did all that heavy work, you exposed yourself by moving prices if you were in there and all these other things. And they're like, hey, they did all the hard work. Do you guys want to just stand on their face? Yeah, we'll take the open interest that you created and we'll take that off their hands for you and take it. So it's open interest. They're trying to predictable open interest is, so if this moves up and hits that spot, well, that's nice and easy. Now we have some open interest that can be handed over to bears, and the bears are given the opportunity to consume it or not. And I do believe that the bears are charged for that. Whether they consume it or not, the liquidity providers get paid. Oh, it's glowing. The point is to provide the option for them to do it, the ability to do it. So that's important to know, that when you have a decay retest with a stop loss, that is also a prime spot to generate liquidity for a bigger player. That's cool. So now we have that developed. That's a spot. Can this decay retest hold itself together and move down? Yeah, absolutely. Decay retests work. The reason they work is because they're small and they seem insignificant and they're not very threatening, because they're not as big and heavy as liquidity. And so they can do a lot of damage. And I think what happens is, the way they work is they move, nobody really takes heed, and then, you know, the bears will get some liquidity here, and then it'll move again, and it starts to compound, and you just didn't realize that it was a significant position. So these can be a little bit of tough. The time to take a decay retest, if you're going to try and participate with one, is when that's what you expect. If you're like, and this happens every once in a while, you say, well, I think the bulls want to buy in at 389. And there's no way to get down there except a decay retest. And then you get a decay retest right at 389 and it starts to pop out of it. You might say to yourself, they got it done, and they got it done. It's when you're expecting it, when it's something you're looking for and you're trying to figure out how to get that work accomplished. That's when they're the best to participate with. They're not my favorite thing to trade with, even though they do tend to pop pretty good. Like, they'll sort of pop out of it. You get this immediate pop, like 3 points or something. But they don't have a good continuation with them. They're just good for a pop. And that's why I think they trade them, is because they kind of get your position going, and then if you can get things moving from there, you're good. Otherwise, so this little pop out of this volume here looks really pretty typical for a decay retest. You see that. Your risk is lower, you put it in there, but the market is very, very aware of this stop. And the reason for that is because now it could be sold to a bigger fish and used. That's how it'll work. So kind of going over decay retests, there's a little bit of philosophy that you got to understand the backbone of how that they fit into the narrative. And then you see this decay retest after we tagged these stops here from here, and we know the bears have a losing position here. Then you're like, ooh, well, is that really going to hold together? Like, are they going to continue to try and pump this down? And, well, if they don't, they're going to lose their advantage. That's for sure. They're going to lose it. If we don't see some dramatic activity out of the bears, they're going to lose it. But what's it going to cost? What is it going to cost the bears to keep that advantage? What does it really cost to pump tension? It costs two things that are really difficult to acquire. You can't just identify as them. I identify as a winner. You can't just do that. Either you are or you aren't. The first thing is, it is very expensive. It's not cheap. You can't just take control of the market for free. No, it costs a lot of money to do the tricks and play the game. The second thing it takes is being right. There is no point to taking control of tension if you're not right. If the market isn't going to suppress, if things aren't going to change, if you're not going to get a volatility spike, if this stuff's not coming, then all the money you put in is just at risk. So if there's no reason to do it, if you don't have something somewhere, I mean, if you were shorting right before the coronavirus, you were right. You were right. But if you're shorting here, trying to collect on the fear of inflation, you're wrong. And that is dramatically increasing the risk on the capital you're injecting to try and make this happen. So taking control of tension isn't just a activity you do. I mean, you got to have more than just, hey, down from there, Pierce. No, he's not. Hop down. Hey. I want your feet on the floor. That's what I want. That's what I'm wanting from you. Can you do that, please? Can you put 2 feet on the floor? Thank you. So if these bears can't manage that, they can dump as much capital as they want, and what the bulls can do easily is just sit back, just wait for things to break. Like here, like the teeth it's the teeth concept. Oh, the bears are winning. Oh, they beat the bullish position. Oh, that's so terrible. Here are all the stops, and then they just buy in on the stops. That's what you do. If you're like, well, I'm right, and you're trying to control the market, sure, go ahead. Sure. And it's the whole teeth concept. So right here, the bears, sure, they seem a little enthusiastic here. That's true. And so will they pick up the decay retest? There's an okay chance that they're trying to participate here. So what do we do about this? Well, is there something coming or something that's going to make them right? And overall, no, I don't think there's what you might call, hey, that's a little loud, please. They're fundamental. I don't think there's anything quite fundamental about the bears. There is definitely, I don't know, a nostalgia or like this heart-throbbing expectation that things that go up must come down, which is just, it's not true. That's not true. It's common, but it's not true, meaning that it's not something that you can trade. You can't just say, well, it's statistically 4 bars up, there's like a 2%, or sorry, I wrote 20, 2% chance of it doing a 5th bar up. Well, then of course it's going to push a little higher, especially overnight. Like, the market's just looking for liquidity. And so if you're trying to trade that just based on that one philosophy, things that go up must come down, you're going to get blown out before you are right. It's going to hurt you first. So I think if that's what they're thinking, like this has to come down because things that go up have to come down, it's not a very good reason. Otherwise, news-wise, I don't know. Maybe everybody sells because they're mad about the Mandalorian losing the Husky girl. I think it's dumb. I don't think that's a good I don't know. I don't think there's much out there. So I'm trying to model out like, hey, what do the bears have over the longer term? Is there something that could be this or could be that? And I'm really sure that I've seen something that I thought was like, well, this could be bearish for stocks. This is going to hurt Amazon and Apple and Walmart and Target. Yeah. So that's where we're at. And you could see right here, look at this. Right after that right there, look at the tension sort of flattened out a little bit. So I'm taking this to be like, bears are a little enthusiastic. Guys, you're a little enthusiastic. Should they be? I'm not sure that they should be. I will mark that. I will mark this one too. I think that's where the decay retest sort of finalized and got together. And the stops are up there. I think if the bulls have stops, that their stops are most likely going to be really far down there. But if you're just intraday, you're probably going to be looking at something like here. Hey. Okay. So I think that's where the stops are at. If I turn off my camera, there we go. That's where the bulls stops are most likely going to be. Now, at this point in the day, one of the things that we've been noticing happens is that the bulls will come in, it moves positive, and then they get some insurance. So we could take a look now at the options data to see if there was any insurance that came in. We had some out of the money puts, but we haven't seen any in the money puts. And the way that this is working, and the way that I think it should work, is that when you get an in the money put, your premium can have a break-even value that's higher than your outright position. It's strike minus the premium, and that gives you your break-even value, meaning everything below your break-even value is 1-to-1, and it is essentially holding an outright. So if you buy a bunch of puts, long the puts against a long, then you have a 1-to-1 versus a 1-to-1. And if you can get that distance there between those two to be like, plus 10 or something. That means if you do nothing, you're going to guarantee 10 points. But if the market shoots up, you have unlimited potential to the upside and you have 0 potential loss to the downside. So it's called a positive spread. It is something you end up in, not a position you drop on all at once. You don't long this and long a put at the same time. You buy, carry the risk until that you can insure it, and basically put your winnings to work. So I haven't seen any insurance against this position here. And that, there's no puts up here. We saw this out of these lows, it moved up and we would see big old, the long puts here. And those would hedge with a value that was about here that you could contain that. We saw that same thing on Wednesday. Haven't seen it yet today. What it does is it means is if price moves down and gets there, continuing down, who's going to pay for the winners, the bears? Who's going to pay these guys? Not them, because they're not losing money. So this makes the market liable. And markets will not be liable. They will not pay you. They must find a bag holder. So it basically means the market's motivated to not move down. That's what that means. It's motivated to move up because we can pay this group with this group and this group. And anyone who's not in insurance, there's somebody to pay to transfer cash. It's a directional transfer and it creates a directional bias for the actual algorithm driving the market pricing model. So it's useful. It's useful to know. Now, this data is not conclusive or complete. It's just a model. We're only tracking the regulars. And the reason I chose the regulars is because there's one every month. And they have decent volume. Like people trade the regulars on the SPX a lot. They do trade the other ones too, but these ones were the most periodic and easy. So it's just modeling. There could be a ton of volume on another one, but I assume that if there's volume that shows up here on the regulars, that it models out the fact that there's volume up there and people are doing the positive spread and insuring the lows. So that's where we are. Right now, I think that this is going to, if this does move down, we haven't insured this, but we have insured this. So, moving down here, potentially the bears could capture or push out this. But is that reasonable to do right now? And they need to set this up better. These guys are already knocked out of the market, and they don't have any liquidity up here. They need more liquidity. I mean, for me, like this seems like essential because this is your origin. This is the origin. This isn't, if the bears are going to come in, if the bears are going to control this, they're not just getting into a little position here because this is up at the highest high of the highest high. It's the beginning. You don't just want a little decay retest with, you want an origin position, a nice liquidity spot that's really near or right at the highs to control the rest of the trend from, and then have root positions lower and lower. This is not going to create an origin position that's worth anything. It's not going to worth anything. So what these guys need is to shove this up. Now, the problem that they've sort of established for themselves is getting up to that level also runs into previous spot where I think there's risk tolerance issues right about there. So getting up there is going to motivate this to move up there, which is going to turn this upside down and cause them grief. The liquidity will show up at this price. If we get it right here, liquidity shows up, they try to sell it, and the market is definitely motivated to pick up the next plop of liquidity, which makes this a loser. Like this will immediately turn into a bag holder. And it's like, you guys are screwed. Like the way you're positioned here looks to me like really great positioning to make a bag holder for the upside, somebody to pay out. So I'm having some issues with the way this is set up for the bears. It doesn't look great. It's not amazing. It's just not. Now let's take a look at the bulls. Where are they? Well, if we move this down a little bit more, we could find a bullish sample here. We could drop decay, but this is much, much closer. So I think that the velocity number moving down to 0 is more reasonable than decay, just looking at it. And then all I'm doing is getting that apparent trajectory. You can see just sort of an apparent trajectory, and you can see it's right here about 1 o'clock is what it's sort of aiming at. Now it's usually if you're going to get the test, it'll sort of speed up and you get a little earlier, as long as it follows along. But we're targeting about 1 o'clock Eastern for that. And if we get a bullish sample, maybe here, we can see price just sit and do stuff like this and then get a bullish sample and then have that go whoop right up into those stops. And then that will capitulate into the next set of stops. And at that point, the bears are going to say, oh, crap. And tension will undoubtedly, after liquidating or pushing through these positions, going to accelerate upward. And we are going to be right at 0 with tension. And that's the first thing that the market's been wanting to do, getting tension to that 0. How do we get that there? That was the goal this morning. It's still there. And you see the bears coming in with their little decay retest, and they're like, stop tension. Oh my gosh, we got to stop this. We're going to lose control of it. It's like, well, yeah, you are. You're on the wrong side. You're on the back side of what's happening here, not on the right side of what's happening. So that's, we got this really interesting struggle going on where the bears are struggling to be right and the bulls are just sort of sitting here. Oh yeah, ZL, I agree. I think the bears are going to fail to defend tension. They could. The point is I'm trying not to predict a whole lot too much after the 0 test. I'm thinking this is all setting up to get us to that 0, just to get us there. And then once we get to 0, then the bears can show us, do what they think they can do. And with daily tension, it's just not looking like that with daily tension that they're going to be able to maintain any control over the market. And this has just turned into a huge fat trap for bears anyway. The bears got stuck down here in the lows trying to do stuff, and they're seriously, if you're just generally trying to, you're screwed. It's just seriously underwater. So, oh, Jim, okay. People are always changing their names. So that's what's going on. I mean, I think all eyes are on getting 30-minute tension to 0. And I think the way that we're going to do that is, well, we could just let the bears hang themselves. We did that yesterday. Just let them come in, but then the bulls did come in after and run that against them. So maybe the bulls can come in again and do it again. It's not really necessary. They don't have to, but they definitely could. So I'm imagining here, this is the world I'm imagining in the future here, is that somehow we get from this area, boxes and lines here, and we end up above this spot here. So we're going to be sitting up here in this area. And at this point, we're going to get that 0 test. This is the way. I don't know how it's going to get there. I'm not sure all the steps that's going to happen. You can't really tell. But I can see that the objective is, let's get a 0 test. And that's going to result in prices being up higher. That's what it's going to do. Yeah, buddy? Don't draw on the wire with the dry erase markers. So overall, I think we see what's happening here. I think we see where it's headed. I think we see what the goal is. And at the point when we get that 0 test, that's when we're really going to sample the grit of the bears. I haven't really seen any grit. What do you mean, look at the wire? Don't draw on the wire with the marker. Please. Looking over the options here, we see still no in the money insurance policy taking against this morning's longs about in this area. Still don't see that. So just waiting. I think if we see some options some long puts come in the money, those are going to insure out today's lows and make it way harder for bears. And there's just no reason for bears to do anything at that point. Right now, if the bears decide to come in and the bears decide to slam this down, they could capture this here. And I think that would lead to tension, at least, maybe staying here. It's still not amazing, but at least they didn't lose control of tension. This is still possible. So our risk here is that. The big thing for me is that reasonable to continue to fight to control tension in this market where the things we have going on around, is there something bearish about our economy? And if you're going to defend to control the probabilities of the market, you need a good reason for that to continue, or your capital is just flat out at risk. So they can still do it though. I mean, they like money. So here we go. We got it moving down. It came back to right to where the decay retest position is about at. And it's trying to move down out of that. And the goal, I think, of this decay retest is this. Because that would pump tension, and they need to pump tension if they're going to get any work done at all. And at some point, if the bears were able to do that and continue to pull off this type of thing, or at least didn't let up, probably pretty quick, the bulls would start to hedge. They'd say, oh, you're demoralizing the bulls. Oh, you're doing so well. So the bulls are going to just say, well, let's just hedge, start to sell calls against their positions, long puts to ensure their positions. And that'll suppress the market and shoot volatility up, of course. And that could create a bearish move down. They're going to need to sort of do this a couple times successfully with proper structure and impress the people that it matters to impress. Right now, I'm not really impressed. I'm not. Yeah, buddy? No. It's sort of attached. Yeah, and please be careful not to step on those cables right there. Don't step on those ones right there. You could break the big magical white box. These ones. Be very careful. If those break. Okay. So there's not much to do here. I am not bearish about this. I'm bullish about this. I think that overall, this is going to give us this. And I think the way that we're going to get there the quickest is through these and through some further stops a little higher. I'm bullish about it. I'm not bearish about this. I don't think that the bears have built up a case through here that's just like, yeah, we have a lot of potential opportunity down lower. I don't think they do. I don't. If they drove this down, it would just look like teeth. Oh, you pressured these bulls. Good job. You didn't pressure any of the origin position. You didn't pressure any of the major trend. You didn't pressure anyone. You just pressured today. Yeah, buddy? Grab a paper towel. So I'm not terribly bearish about this at all. I'm bullish. I think the bulls are going to come out on top, and I think that this is going to get to zero. So give me a minute. I'm going to get him going on something so that he has something to do while things are going on over here. So I'll be right back. Just a second. Okay, got him going on something. All right. Not much again. I'm thinking Monday. Question is, if you're a bear, would you want to hold on to risk over the weekend with this condition? Would you be saying to yourself, I just like this. I think this is so, like, the opportunity of the things that are down here. There's a lot of opportunity for us to grab onto, and holding onto it over the weekend could squeeze out some of the bears and then give us just a huge move down. No. The Bears have, however, been a big fan of running algorithms that get reversed. That's just been their forte for the past week. Run an algorithm that can immediately get reversed and fail and cost us money. They just have been loving that trade, which has not been loving them back. So we've seen that quite a few times. Algorithms just not working. And when I mean algorithms not working, I don't mean they didn't make money. I mean they didn't get the work done needed to maintain any control over the market. They didn't run an algorithm to demoralize the bulls or to hold somebody underwater or to catch a bag holder or to keep tension moving lower. This was an okay one, but price came immediately back up, and tension, once it was over, this is not working anymore. So they have done that a couple of times, and it hasn't really worked for them. The algorithms that they're running to try and bring prices down are just ending up in liquidity for the bulls. So how many times are they going to do that? Are we going to see that again today? Are they going to run an algorithm just to watch it get folded over? They shouldn't. I mean, don't they learn? Do bears not learn? Is that a thing? So if they ran an algorithm here, called up Fox News or whoever, CNBC, and said, hey, 10 grand to your producer if you guys say this 2 sentences, I don't know what they pay. And they put a $50 million algorithm in there, which I think it's probably more like 150. It's like 10 million just to make a share, or one stock budge a little bit. It's gonna be like $150 million or more. We'll run a big old huge hundreds of millions of dollars algorithm, pay up, the news station. I don't know what that is, $100,000. We'll just guess. Get them to say stuff. Maybe that relationship costs you something somewhere. Maybe, I don't have any idea. Then you try to, you already got your position on. Your position, which could be anything, it's cross. It could be, I have no idea. It could be massive, whatever. You're going to have to pay for your insurance. All this stuff just to get it to move down. And then after all of that, not really maintain control. This ends up just coming right back up in their face. They've done this a couple of times. How many times do you let your traders run algorithms before you say, would you quit doing that? It's really expensive. Maybe they made some money, but the point is they weren't able to gain any long-term control to get a sustainable trend. The bulls have maintained their sustainability in the market. They're sustainable. They're a sustainable form of energy. Something that happened a little bit ago that I thought was interesting is oil. I was really sort of bored with oil, and then oil did this interesting thing and got us up into this little upper area here. Oil kind of perked up a little bit. And it's because there's just not much else going on. We got Bitcoin and oil, which is what has been driving the interest of the stock market, like eyeball interest, popularity for the past couple days, I guess. Bitcoin sort of showed up. It wasn't a big component in the week, but then Elon Musk, of course, made it a component because he can, which I'm jealous. I want to be able to I want to be able to make Bitcoin popular at a tweet. I bet Trump envies Elon Musk like so bad. He envies him hard. Elon can tweet and make Bitcoin shoot up. Trump can't even tweet. That's funny. Anyway. Let's take a look actually here. We got move out. So we broke out the value area here. It moved quickly. So nothing special. The volume was normal. Nothing super special on that. But it did move pretty fast. We have absolutely a low volume node here, which markets like to test or bounce off of low volume nodes because it's hard to, there's not a lot of orders there. There's not a lot of liquidity. And so markets don't really like to stick around areas where there's no orders. They're like, the needle in their vein is volume flying through that they can get liquidity from. So this is the antithesis of the drug that the markets are addicted to, low volume nodes. They're like, I don't want to be there. Get us away from that. They want to be up in the volume areas or hunting new piles of treasure. So this is interesting. You could see that the value area here was expanding. You see that? So you have compression and expansion. We have a little bit of compression here. You see how it's compressed and then it expanded, and then we have it shift because the point of control shifted. So it moved to the value area. And this is sort of interesting. You see how the value area is like halfway through this node here. So this is interesting. So these are basically, all this volume down here is now what? Unlikely? Disenfranchised? Probably just winners. That's all. There's just a bunch of bulls. Well, it's bulls to the institutions. It's sellers to everyone else. So that's interesting. We had some expansion, a shift, and then we could see that shift at the value area low is cutting off a bunch of that lower value area, which means that the value areas, I don't know, I look at that, which it's not my calculator. The value area is the one that we stay. If I said to you, all the volume is in between here, and then you went like this and you said, no, I don't know, kind of makes you think that the standard volume profile calculation that everybody stares at is sort of misleading right now on the bottom. It's just wrong, I guess. I don't know. Look at that, right back up to this, the decay retest position. It just keeps sitting there like that. Let's see if I open, I'm gonna try to do this real quick. Hopefully it doesn't seize up the computer. I need another chart. I wish that they had on Thinkorswim a way to just open a blank chart. Because when you pop out, when you do what I just did, detach the chart, what it does is it goes into the computer and copies the code. And if the code's long, it reconfirms that it's not broken. And so if you have large, which these are very long pieces of code that Thinkorswim has a hard time with, there's this couple minutes there where you could see it sit and think, especially during market hours, because it's going to reference their servers. I'd rather just open a blank chart so Thinkorswim doesn't have to verify everything. Let's pull these up again. Let's just do today, though it's probably going to load all the data anyhow. And on this one, let's do a tick today, single ticks, just like that. We'll make the appearance a line chart, like that. Okay, actually, no, I'm going to do the same thing on this one. Tick, just today's data, one tick. Okay, appearance, line chart. All right, while those load slowly off the server, which is slow because the market's open. We'll take a look at those in a minute. Right now, you'll notice right here we have impulse. And this is just, I mean, I've been glancing at this and I don't mention it's here's our impulse, and you can see right here is the counter. And it's what it does is basically, you know, it just waits for it to be flat for a little bit, and then it lets you know that it's stopped moving upward, and then it turns dark, and then you can see the counter. And a lot of times counters will well, not a lot of times, this is going to end in one way or another. Either it's going to stay here around this thing. So if you're the philosophy sort of that I hold in my head about using this is that as long as this stays in this condition, you are expecting mean reversion. It doesn't mean that price will go up and come back to this price. It means that this is the mentality of the market. Mean reversion stuff. As long as this continues directionally, don't try to do mean reversion stuff because it's in an impulse wave. It's finding volatile volume, which is a fancy way of saying it's expanding. The range is getting wider. When you're like this, you're not finding volatile volume, meaning the volume is in a range. And a lot of times that concept is compression. The issue is that you don't know the implied range distance. That's one of the problems that you run into, is you think that the range is this because you see the prices, but the market may go like that. And it's still going to mean revert, sure, but you don't actually know the implied range distance that the market sort of has in its head. I mean, unless you're in a position and you're aware of where that you're going to make choices and stuff, maybe you could glean. The point is that the mentality is mean reversion. So this will end either by moving up and finding a bunch of volume here, and then this will go sideways and then go boop, or it'll move down, same situation. So if you could predict what it is you're looking for out of the market, you can use this to model that out generally to say, well, I'm looking for this to sort of grind sideways for a while over this. Well, you know, when this lines up with that expectation, you're saying, okay, we're getting where we want, I can do some mean reversions. If you're like, no, I expect this to blow out the highs or whatever, and you start to see it impulse, you can start to say, okay, it's modeling that, the thing I'm expecting, and that gives you confidence and stuff. So this is really useful in that regard. The other thing is this moving average on here. It's a selectively weighted moving average, and it alters its input data set. That's the selective part. It alters its input data set based on the condition of the market, or the price's relationship to the moving average. So it'll select different data based on how price is relating to the moving average and to the VoLTE-WAP originally. So the objective here with this is not necessarily to look for crossovers or whatever, is to show you a more quick impulse. So you can see the major, like overall, you could see the impulse to the counter move, but with the SMA, you can see that there was an impulse, and you can see almost clear as day, there's a stutter here. And then it sort of goes sweep and sweep, and then we have more stuttering, and then sweep and sweep. And it's just to model that out so you can see the character of the market. That was the intent of the selectively weighted moving average. But it's kind of a neat moving average as well. When things get nice and sweepy, you know, nice big sweeps, and they look like waves and stuff, it does a pretty good job as far as moving average goes. Not that I would say it was the end-all be-all, but it does a pretty good job of monitoring the quicker impulses and showing you where you just use your eyeballs. You just look at it, you're like, oh, sort of stuttered there. There's a little difficulty. And if I didn't have price plotting under here, you should be able to tell kind of what price was doing. I mean, look at this, right? And then you look at price and you go, yeah, price actually kind of did what the moving average was suggesting to your eyes. Sweep down, sweep up. Look, price did that. So sort of generalizing that. Does that make sense? It's modeling that out so you can have two versions of what's going on. I mean, with this going like this and with this going like this, we're going to talk about moving averages. That's what we're going to do. Oh, here we go. Here we go. Okay, we can take a look at this. Why am I pulling up the tick chart? So this is not random. This is not random. You guys see me do this before. When I look for markets to grind up, when I look for the squeeze, that is not an S, squeeze. Or I call it an inversion because there are nothing but bearish signals that you constantly want to sell. And if you just inverted your thinking, everything makes perfect sense and you do fine. When I see grinds up, I like to look for the tick to push that high and then not push another high. And that creates that inversion condition. And since I'm looking at this somewhat bullish, I haven't looked at the tick chart yet, really, today. My expectation is somewhere, hopefully lower than higher, we'll see the tick push up, give us an inversion level. We pop to the other side of that inversion level and it creates somewhat of a support. And we can use that to grind a little higher. Okay, so that's what I'm looking for. I'm not randomly pulling this up. I just want to make that clear. Like there's a reason I'm pulling this up right now. So let's scroll back. Let's make it a little bigger because I need to find the highest value of the day. Oh my goodness, did I miss? Okay, well, it looks like it's still loading data in. What is that? All right, 570. Scroll forward, 400, 400. Okay, so 570 right here. And I'm going to cheat for a second here. I find this setting completely annoying because it's sort of irritating on my eyes. Oh, there we go. So our inversion most likely right here. Oh, probably about the high of that bar there. All right, we'll get back to that in just a second. We're going to take a look at how that lined up. That inversion level. So we could, let's do right here. So it's probably, it's not probably, it's, oh, okay. So it was just before. So it's here. So I'll mark it out. We'll take a look at this inversion. Okay, so the way that inversions should work, and I'm going to turn off the synchronization because that's annoying. Okay, the way that inversions work is you want to see it create the value, and you want out of, not into, and this is out of, I would say out of the low. Then what you want to do is see the price come up, retest that level, and stay above it. This is the way inversions work. And then they'll sort of do this, the channel thing, where you can then, people start doing this kind of thing. It's useful because it's a little bit faster than a channel, and it supports the idea that you're going to have this sort of mentality moving forward. And you can see right here that we got up and it came back and tested it, but then it's been having some issues. This is a problem. And look, it even got on the back side of it and it's staying down. So this is an issue for setting up our inversion. It's not working. The inversion level is underwater. Now, that doesn't mean it's going to go, it just means that this condition, which I call this a mechanism, it is a mechanism of the bull. It is one of the ways you use the market mechanics to drive bullish markets that grind and stuff. So this mechanism is not working. There are other mechanisms to use. So just, you can't just say because that one mechanism fell apart, it's all broken. But this one is not working. If we get the price to move up and then support on the other side, then it had just a very rough start through this section, and you got to be flexible about that. This is one of those things that, if you have everything lined up, which I think this is sort of an awkward morning a little bit. If you have everything lined up, these usually work pretty good. I like to see it move down, move up, set the inversion level, and then see price stay inverted until we get the high, and then it goes, and right there, the inversion stays in until we have a new high on the tick. So right now our inversion has fallen apart. It's not, it's like, yeah, it's just not looking great when it comes to an inversion. We are moving down. What are we going to accomplish here? I was just reading Matt's comment, and I was thinking about that. 13 years of the same company. I couldn't sit still that long. I like to innovate too much to work for corporations. They don't, every company I ever worked for, we didn't get along with because I disagreed with the way they were doing things. And people want you to follow the procedural manual, not think for yourself. I can't stick with corporations unless they gave me a ton of freedom to like innovate. I never held a job for longer than a year before I was looking elsewhere because they would drive me nuts with their SOPs. Page 13, line A says, you will stand still. I don't know. I just don't do that well. Especially if you don't have dominance in a hierarchy. Okay, so here we go. We're getting that pressure down. These bears are injecting some capital into this. What are we seeing out of them? Now remember, today is not quite like the previous couple days. So I'm still bullish about this overall. That you have to understand my position here is that for me, these bears are going to try to do something that I don't think that they should do. I'm going to disagree with this, but hopefully we mapped out the upside, we mapped out the downside. So as you see this happening, you should already know what they're doing. You shouldn't be going, oh my gosh, there's a sweep down. Oh, what does that mean? You should say, okay, the bears did run the algorithm. We know when bears run algorithms, we know what they're looking for. They're thinking if they can get this, that they can get tension to stay down, and that'll give them advantage into the weekend onto Monday. That's the goal. The volume profile looks constructive. What do you mean by that, Jim? Sorry, Jim made a comment. I'm not quite sure what he means by constructive. Okay, so the issue that I have with that is that the bears getting down to here could pump tension, but it doesn't advance the real objective, which is getting daily tension under zero, which probably won't happen. But at best, this will close like this. And at best, they could, if this was just a massive move down, they could see this happen. This would be best case scenario. It is not a likely scenario. It's best case. So this is an algorithm. And remember, algorithms have the shelf life of, I don't know, bread. Not even bread. What is a shorter shelf life? Plutonium. Terrible. No shelf life. It destroys itself quickly. As soon as you run an algorithm, the market will immediately respond to it. So they need to find support for this algorithm into the close, which is they need 2.5 hours. And then overnight, we could just act like that doesn't happen. But it is the weekend, so that we're going to have to add the weekend here. And then opening tomorrow, or Monday, then they're going to need that to have caused some capitulation from something. And then that will have to open lower. So tension's going to have to open here. And then immediately, if that happened, a lot of people would react to that. We'd have a zero test showing up very quickly. And I think the bulls will defend that. So this is the landscape I'm trying to lay out. You don't run a multi-million-dollar algorithm without understanding the landscape here. So why did they run that algo? Why? Why did you run this algo? Why did you dive this down to basically what? Trying to get the expansion bar? Was it market makers trying to, rebalance, dump their inventory? Is that what we're looking at? So this algorithm down was trying to target this so that we could have daily tension maybe here so that tomorrow it could open here and close it. This is the landscape. That's what they wanted. Are they going to get it? Well, the question right now, I think that you'd have to answer. In order to say, to definitively know, are you going to get this? Is there scary news on weekend? Can you answer this question? Is there going to be some scary news that happens on Saturday, on Sunday, or Friday after the close? Is there something scary that's going to happen over the weekend? Because if there's not, which I can't actually answer this question, I see trader behavior and I can predict the news because it's usually pretty easy to do. I'm sorry, no. So this algorithm here looks like it's not going to be as rosy as they might have hoped. I think they were hoping to get more work done. They did not get it down even through the bullish position or to it. They were like above it. I look at the last bar there and I hit the close. That's about where I try to target my level. I don't think they even quite got it to it, much less, I mean, sheesh. They got maybe 50% of the way to this stop. So that algorithm, sorry. I'm so sorry. No, this is a bad move. You could see there was an impact on tension, but who are you running out, guys? Who are you trapping? If anything, this algorithm is advancing the bulls towards getting a second position. Look, we drew closer. That algorithm brought, we were thinking, I mean, look at this, it was sideways. Now all of a sudden the bulls could get a position. They just helped the bulls. That's what this is, assisting the bulls. And if this goes like this, and we have it go like that, and we pick up, there we go. We'll have a bullish position here. And hopefully you've noticed bulls like to do stuff like let's see, what was it this day? Well, yeah, I'm not going to spend time doing that. But bulls like to go, here's a long, they'll stack into a spot. We've seen this a couple times. Bulls will do this. They figure out where they want to, build in. That's what they do. So this move down didn't pressure this position at all. It's brought this closer. So if we get another little move down here like that, we could have a bullish sample off of the velocity right here. That could give the bulls the chance to pop in. That's great. Now you have to remember there's the switchback. Switchback would be if the velocity went under, we'd have the bulls sampled here, but then we could come back up and sample the bears. And yes, that absolutely could bring in some bearishness into the close. If this came down, we picked up the bulls and it, did something like this, and then the bears are like, oh yeah, and they decide to come in here. They could drive these bulls out. The difference between one versus the other has to do with expectation. This is your filter. Looking at today and the way it's played out, do you expect the bulls to participate? Do you think the bulls see advantage here? Do you think they have good reason to pop into the market and run things up? What is your expectation at this point? My expectation is that the bears are underwater. The bulls are not. The bears are using a last-ditch effort, decay retest to try and gain control of the market. And they just ran an algorithm that is not going to get any work done, but it will bring in the bulls. And so I think at this point, the bulls are winning and the bulls will continue to try to win. Unless they do something different, I won't expect something different. So I expect the bulls would come in. And instead of this reality, I think that this is the one that we're going to see coalesce. The bulls pick it up. They start to drive it higher and they know exactly where to go right here. Take out this decay retest stops. Let's go. That's where you want to go. So that's my expectation right now. And I'm not going to change that expectation just because there was an algorithm. We understand these algorithms. You watch the market. We saw their position. We saw it having a hard time getting on the backside. We knew about here that algorithms became a risk. So we hopefully been talking enough about it to know their objective would be here to get tension to curl. I get that. I get it. Totally get it. So you can now answer some questions about that algorithm. What was it? What was it for? Was there a news event? Who cares? The news event is totally coincidental. This algorithm was run by this group of people who see that they're able to get here and are eyeballing this. That's who ran it. The news algorithm, the news just, they called down and said, don't announce your news until this exact time. Probably gave them a 10-minute window. At that moment, the news was released. Okay, so we know where that's at, the expectation here. I still would love to see a bullish sample right out of here and pick that up. It's not necessary. The bulls are still here, and the bears have a weaker position they're trying to operate from to get some work done, and it doesn't look great. Okay, so Jim says, because I challenged him on his constructive, he said, a lot more volume support at 3907. We're going to look at that. 3907. That's not the chart. This one. 3907. Here. Okay, so that's the previous point of control. Whoa, that's so crazy. Whoa, trapped? You trapped them. Trapped some villagers or something. It's Monday where they weren't anything. If bears made a strike on Monday.
Whoa.
Okay. Volume profile looks constructive, which I think this is how I'm interpreting that, okay? Like, I'm not nitpicking your definition. I'm saying you mean it's bullish. Like it's constructing prices higher versus destructive, which would be bearish. That's how I'm interpreting your comment. And he's saying that they built up a strike down here, which was better than the one than earlier, that they weren't able to build that up. And now that they did it, they're running into some, it's creating support and it's constructing prices higher. That's what I'm interpreting. Correct me if I'm wrong. Okay, good. I like it when I understand things. It really is. Makes you feel like in crowd. Like, I'm part of the group. Yes, I can feel like I'm an outsider even though I'm running the stream. It's possible. Okay, so we have a constructive volume profile. Personally, I don't understand how people watch volume profiles without the developing. I don't get it. Like, it's just like, so you don't know where you were and you don't know where you're going. You can just see where we are. I guess the market's a stochastic, but they're stochastic. They are stochastic divided by behavior, which ends up stochastic could have like, you have a 62% chance of a trend, right? Like we all learned this when we learned about randomness, but stochastic over behavior means that this initialization process here is not random. It means that people did things that inspire things. And so the markets are not purely stochastic whatsoever. And the biggest way to tell is, are you stochastic? No. Well, if you're not stochastic and you place a trade, you just sort of destroyed the stochastic nature of markets. What they're trying to say when you hear someone say stochastic, what they're getting at is that there's so many moving parts, maybe all these things, that cumulatively all those moving parts are function off of chaos. And chaos is where that you have randomness that's not randomness, but you can only predict the outcome of something based on the initial conditions. And since people are difficult, it's the variability in people that make that initial condition extremely difficult to predict. And it's also one of the reasons that trading algorithms fall apart. They have a life cycle because people are not dumb. We can make choices. So eventually people start to figure it out and we start creating initial conditions that work through, it's the people, the algorithms. And so markets are chaotic more than they are stochastic. And they're chaotic because you keep trading. If traders quit trading, markets would be a lot more stochastic, and they'd also just be a flat line. I don't know if you ever looked at a stock that only institutions trade, but it looks like this. They go, okay, that's not even close to what they look like. Let me see if I can draw a straight line. bonk, bonk. They're like a square wave sort of thing going on. Because institutions already know the value, so they just do it. So it's the chaotic nature of markets that destroys the stochastic, what is that? The stochastic implication or the stochastic expectation, or I don't know. The way they try to sell markets is they're stochastic, and it's just not true. Hey, look at that. We got some portfolio orders showing up here. And this looks really good. I want to point this out. So if any of you use or are watching the Zoom and you see this, look at this. Can you see how that, I feel like I need a straight edge here to do this. Can I do this with this? I'm going to do a little book. Okay. Right through, oh, this is going to be really weird to do. Here. Oh, man. This is hard. Okay. Right through here. Do you see how, oh, my straight edge is off? You know, forget it. You guys can understand. There's this like price area, and you see how that they filled until we got about here, then they stopped, and then this sweep up, they stopped. There's like this price level there where the portfolios wanted to consume liquidity, anything below there, and they stopped, and then they filled there, and when they stopped, popped up. We move down, they start to fill, and you see how it's not saying portfolio orders, so they're done. They've stopped again. So when you look at this, what you can sort of infer is you could say it looks like they're wanting to purchase under that level, doesn't it? Do you see that? Well, when portfolio orders fill, the distance here, can you see this distance? This distance, to some degree, represents intensity delta. So basically, as they diverge from each other, they get further apart, the intensity is going up. It's supply. They're filling a lot. When they start to converge, you could see these little moments where they start to converge. You can really see it here. That's demand. And what's happening is not that they are doing supply or demand. That's not what's happening. What's happening is that they're consuming the liquidity in the market, and as the liquidity in the market is greater than their orders, it looks like supply their orders are greater than the liquidity. They want to fill. So there's a bunch of orders that come in, and it drives prices down because it's sort of a bunch of supply. And then as the liquidity stops being available, the liquidity starts being available, I have this all back, you get the demand because, there's more liquidity then all of a sudden it looks like there's not as many orders coming in, and because they're consuming liquidity, and you get demand where there's liquidity there, and it drives things up and they converge. So their activity level starts to slow down, and then eventually they turn off their algorithms to fill, like here. And that's when I call it their finished filling. This is what I say. Finished filling. And it tends to be that when you have a nice dip like that in essentially a bullish market, so we can actually scroll back, you kind of just generally look, you see they buy into the dips, and they will buy all the way down for eternity. There is no there is no risk threshold on these folks. Then what happens if you have a nice long dip, what you can do is then, right, once you see them filling, remember this stops tracking at the close. So this is a little bit of overnight session there and there's no data. It doesn't mean they're done. It means there's no data. So that's what this says, close and open. That's why that's there. So you realize there's no stock market data. So they finish there, and one of the things that I'll do mentally is just say, okay, so this is about the level where they are done, and markets like to come back and retest that level. It's not an entry that I trade or anything, but it's something you can take a look at. So they finished up here, and you see this one, it sort of bounced along the top of their position. It's because they filled all the way down and they got done there, and so you can just track it. They filled every time it dipped, and then it started to bounce above it. So one thing to remember is that they're not always by the dip orders. So we had some downside. So right here, they just fill all the way down, Doesn't freaking matter to them. Boop, and then they're done. And because they finished up overnight, I don't know where the portfolios stopped filling. They probably had the extended hour. Oh, look at that. We get back down there and you see how they filled in that area again? They continued to fill in that area. And then they got right here, they're done. And so it's a structure thing. You're not going to say, I see portfolios filling, this is going to bottom out. You look for them to see what they're doing, where they're doing it, if it makes sense. And then once they finish, you can track that level and kind of say, well, they finished up about here. And then you'll notice things like they wanted to fill under that level. And we see that going through here. And then as we pop above, and this algorithm even came right down to where that they stopped filling earlier today. This is a pretty common thing. We can scroll back and take. Here's a spot where, they ran through, look at this one. Oh, this one's interesting. It diverged into the lows and then just really slowly converged all the way into the close. Came back down. They continued to fill. What interests me a lot is that they basically do this for every trend, for every major time that they move down. What interests me are two things that I think are kind of a big deal on for this indicator, if we're going to take a look at it, is that if we see prices declining and there are no portfolio orders, the question you have to ask is, why don't they want these prices? They'll take anything and they don't want this. A declining market that goes down a bunch and doesn't have portfolio orders on it gives me a subtle hint that there are longer term. So this is a longer term. This is like month kind of thinking that there are longer term expectation for lower prices. Because if you're moving down and you don't want something when you will take anything, you might expect prices you might think, well, we're not going to start filling until here or something. So if you see prices declining through a day in what you would call bearish moves, and you don't see portfolio orders, take notice. That is an odd behavior. And that you could say, oh, okay, well, now we know on a little bit longer term, like month or more, they're thinking we don't want to start filling yet. The other thing is what I call a probe. There's an E, a probe. What a probe is let's say you have prices here and you're just like, wow, institutions are filling, and they're just filling like crazy. The market occasionally will get this idea in its head, well, how high will they buy? How high will they fill? And what happens is the market starts searching. And what it is where that you have if they're buying under this level, right? You see price come down and then they start filling. And then they keep filling and they keep filling and they keep filling and they keep filling until you get to the very top where they finally stop. So what the market was doing was basically bidding up the portfolio orders. And you know that because prices are rising and they're filling. So this is sort of the opposite of the other scenario. Upward prices and filling. And I call this a probe because what happens is right at the top where the portfolios stop and you see price move down. And sometimes you'll see portfolios start to fill again and it'll come back up. And then it comes down and you say, well, wait a second. It's supposed to be when they stop filling that's supportive, cash coming in. And you see prices move up. This is common. But if you see this, price moves down, you say the market was just trying to see how high they would fill. See if we can find one. Or that we get a price probe. No. No. It's not that common, and it needs to be a lot bigger than just an hour or two. Oh, this one. This is a good example of that. So they were filling under this level, and you see that through here. But then they kept filling higher and higher, and they would just turn it off for a minute or so and higher right into there. And look at that. This is a probe, and the objective here is to find out how high they will eat up liquidity. Why would you do this? Well, if you knew that, I don't know, there was a bank needed equity exposure, you would do this. And then as soon as they're done, their exposure's done, you know, because the market's goal is basically to charge you as much as possible. Once they're done, what happens is the market goes, yeah, well, this rise in price wasn't real. It was just, there was a big player consuming volume. So that's the only time I could see here where this happens. And this is something to pay attention to because it is so common that a price probe is a top. So the probe can be a top. And this is something I do pay attention to this kind of thing. When you have prices rising, remember, they'll fill under a level, and that's okay. It's when they start filling higher and higher. Like if this was still filling and then it stopped filling here, I'd be like, holy crap, that's a probe. They were, okay, so this all the time will associate itself with tops. The second one, which is the decline, is associated with second legs down. This one is a little, it's not as strong. You're going to need more conditions, but it is absolutely something I will notice because I wrote the algorithm. I know how it works and I understand what these guys are. They're consuming volume across the market. And basically they say, we want prices here. And what does it mean if price is giving you lower price? And they're saying, we don't want that. It's like, well, then what do you want? They're like lower. So it's associated with the second leg down and the price probe. This is the one I pay attention to this a lot. Another one I like is the BTFD, these little buy the dip things. And I like them when you see the market do this and you have a little order right there that just finishes. And right at the same time, you have like a bullish liquidity and everything lines up. And you see that I like those two. I'm a big fan. So we come back. There's one right there. I remember this one. I think Joe tried to go long here and then he covered here. And I was sitting there going, oh, those buy the dip orders are good ones to see when, you know, you're expecting it and all this other stuff. I think that was a tooth, actually. We had long. They got liquidated, creating liquidity, and they filled on it and it popped out. It was just, yeah, so the little buy orders in the dips. They don't happen all the time, but there's a couple of small ones. I like to see it into the dip and then track the liquidity right there and make sure it lines up. But that's good to see. So there's a little bit of nuance with this. You just want to think of portfolio orders as consuming general liquidity. So we're looking at specific momentary. Okay, wash them up. We track a lot of specific momentary liquidity here where it's at a moment, you know, you see the volume and everything. This is just general background liquidity consumption across the board. They're just eating. So they'll eat all the way down. I mean, I've seen them consume liquidity on a 300-point drop. They finish up at the lows. It's like, and then you see it, and then that's part of turning over. So that's that. A couple of notes on that because it's a little bit slower right now, so we can talk about some of these more auxiliary indicators that are going on. So you can look at this and you can see that they were wanting to buy there. Now you can also see that they were filling some orders a little bit higher prices here. So they're picking up a little bit higher. It's not effective really to think of them as buyers or sellers, just because if you think of them that way, it's just consuming liquidity. Still haven't gotten above this here. Let's take a look at our tick. Maybe we could reset an inversion. That'd be cool. You know what I want? I want to see the day high. So let's make an indicator to do it. And of course, you need the period to equal day. There we go. And we could do, we'll do the low. I don't usually track inversions on the lows, but we'll do it anyway. Okay, we'll get our high and our low. If it'll be so kind as to plot it for us. If not, I have other tricks. I don't know why it's not plotting it. It's like the easiest thing ever to plot. Thinkorswim at its best, right? That's okay. That's okay. We can do this. We can do this. Watch. So we'll just make these recs. We can do it. We just say if the bar number equals the first bar number, then get the close. Otherwise, we're going to do a maximum. The close versus the day high previous value. Spelling. And we will just duplicate this and we'll swap out every time it says high for low. Now we're going to say, just call it the high, day high. We just force you to do it then. If you don't want to do it, calculate the recs. It's going to be slow today. Well, while we wait for that simple algorithm to compute. Let's take a look at what we're doing here. Nothing. Look at this. Look at this. I get a little sawtoothy here, man. Sawtoothy. A lot of the times in markets that are quite directional, we get a little sawtoothy pattern. It's been a little while since we had something like that. It's usually in a really strong market, you'll get a sawtooth. And that's interesting because I wouldn't call this a really strong upward move. Like we haven't just been grinding all day, but we have it anyway. There we go. Our calculation computed. Since the high-low function on Thinkorswim is mentally challenged. Oh, you know what? I did forget to change the max function to a min function. That's my fault. This is a min. There we go. Okay, that should work. Anyway, the high is about 500 still. Nothing new there. Yeah, Pierce? I'm suspicious about what my child is doing. He's gotten quiet. Just a second. Okay. I'm sure I'm not the only one who has parenting alarms that go off during silence. Yeah, exactly. Yeah, I'm not. Somebody said that immediately. It's a standard in the parenting world. Okay, so sorry, you guys are having a look at this while it was computing. That took forever. Thinkorswim. This is one of the Thinkorswim things. It's like you guys could do better. And this is an issue with tick charts. Did you see what happened? We had the whole tick chart loaded in, and what Thinkorswim will do is unload your chart. If you ever want to see something really interesting, on a Sunday at about maybe 6 o'clock p.m. when the market opens. You have to be there right when it opens. Pull up a 1 tick chart, a single tick chart, and just with like 5 days on it. And watch. And what'll happen is Thinkorswim will load your data in, unload data, load, unload, load, unload, and if you have any algorithms running on a tick chart, it'll trigger them like 60 times before right after the market open, and it really is insane to watch. I've watched it before. It makes my blood pressure go up because it's annoying. It's like if the data's in here and we have it in the store, why can't you just put it on the chart and stop doing silly things? And it's because they're all worried people are going to steal their data, as though Thinkorswim has the best granular data. Come on. Everyone knows that Thinkorswim gives you free access to all the stuff because essentially at the tape level, their data sucks really bad, but you get all the data, and that's what's useful. Their order book and stuff, their data is just not all that great. It's got problems. But that's not why you use it. You don't get on Thinkorswim to run an algorithm on the tape. You get it on Thinkorswim to run higher level algorithms, days and months, and to scan markets and stuff, and to access everything without issue, except for the RTY, or sorry, the TF. Remember we used to trade the TF? And they brought in the awkwardly named RTY, and you're like, why does that be the ES, the YM, the NQ, and then they bring in this clumsy looking goof of a name, RTY. All right, look at this. We're moving down again. And what? Velocity moved away. It's a little bit further off now. That can give, not us, it could give the market a little bit more downside range to pick up a sample of the bulls, which is what the market's trying to do. It's investigating if the bulls will pick up another position and drive this up to wipe out this decay retest position here. That's what the market is looking at right now. It's saying, can we get some bulls to come in? And you can see that little move up and now pushing it down again. I guess getting it back down to here is probably going to get it to the same area. Our advanced decline is at 13. Negative 190. Negative 190. We saw an algorithm would need to go almost 200 points. And algorithms usually work in spurts of 100. Can we see that? Sure. Right there. Doorbell. I'm going to send one of the kids after the door. Hey, one of the kids, get the door. That's what kids are for. So we could see this big spurt down right here. We're looking at about 100 stocks moving past their previous day's close to get that kind of behavior. What's interesting, well, this is difficult. You have to look at this price here, this value here when your cursor's not on the chart. So 158 and 158. So they're about the same. Look at that. Stocks are upticking more than downticking while that they're moving down past their previous day's close. That's what this is. This is every second or something. I don't know how often the New York Stock Exchange calculates it, but this one we found it's about every second or so. They're calculating how many stocks ticked up, how many stocks ticked down, and they accumulate that over the day. So it's already an accumulation. And this one is just adding up how many are above or below. It's not an accumulation. I think this is interesting. Let's take a look at our options. Did we get anything interesting coming in from the puts or the calls? No puts above the market in terms of calls. Well, I haven't been watching the call data as long, but seems pretty active up here with all these calls going on and stuff like that. I do not like it when it's highlighting the study. There we go. So we have this big old plop of out of the money calls. It's about that. The volume profile, we got into our node here. You see in there, it's like filling in that node in between here. What happens if this is the point of control right at the close? Man, that means we're not going anywhere. Is what that would be. Nothing dramatic. Okay, so you saw the algorithm that they ran, which is to drive a bunch of stocks past the previous day's close. It wasn't like a ton. It was only like 50 stocks or something we're able to move in that cascade. So it wasn't a huge algo. A huge one's going to run 100. And any more than that, I think, starts putting the capital at immediate risk and can have other issues. But yeah. No test. No test. Still in our little range mentality here. There was the inversion level right there. See, it stayed below it because it didn't quite work out. This is a thing. And if the bears do nothing, this is withering away. So I mean, let's see. If we close this here, let's say, and we're looking up here and we're going like it's negative 1%, but this value just rounds, like it's rounded for your eyeballs. It could literally be like negative 0.2%. Right up next to there. That creates a really interesting situation because when you're that close, you have this like logical problem, which is, are we testing zero? And then if, let's say market goes like this, and then overnight we see prices come up, is this a zero test, sort of like implying a zero test overnight? Since you don't have the data, it's difficult. You can look at the statistical advanced decline chart. It has the overnight advanced decline values, but they're a statistical version of advanced decline. So you can guesstimate, but if we get this real close to zero right into the close, this is always really interesting because if we get that, when that happens, it's like, is this the zero test overnight? And then the market opens, and what does it mean if it pops up here? Like if we had a zero test overnight that came down and then it came back up, did we already have a zero test? And it creates these logical problems, especially for people who are really actively trading and watching this kind of stuff. And they're going, so did it happen yet or not? That's difficult. It's just, there's nothing easy about it. It's very, very, very difficult to make those choices. So if we close right up here next to the close, it creates a lot of problems. If the next day we pop up, this right here will be a zero test right at the open. Markets like to do this kind of stuff because it pushes out smaller hands. Like if you're going to be trying to trade on something like this and you try to front run the concept of maybe a bearish zero test, let's say somehow you got it right. That's what, and you try to sell here and it's going down and maybe you're even in a winner. The point is at the close, they know, the market herself knows. The market knows that most don't like weekends. So the market's going to say, I know that you'll probably buy out of your sell because you don't want to hold over the weekend because the setup here is not all that great anyway. So having things hold sideways into that can cause a flurry of trading into the close because people just don't want to hold into the close. And then as the institutions try to rebalance, there's this demand as everyone tries to get something done before the close. And so this type of thing does happen now and then. It's not, I wouldn't say once a week, maybe once every other week or every 2 weeks. Every third week, maybe. At least once a month. You'll see something like that. And it's a logical problem that you really can't find a solution to. And that's what makes it effective as a tool, is there's just no real answer to it. And it drives your risk up because you can't solve it. It's like, when did the test happen? When is it? If I hold over the weekend, am I going to be Is it going to open here and I'm underwater? And it's just really difficult to answer that. So that's why I think this is starting to come into view. Unless we could get some bulls to come in. And we can clarify that real good here. Well, that's interesting. See, I don't know. There's clearly some structure here to these 150s. I don't know how to take that. They're not like a significant enough about volume for me to say that's absolutely something, but structure there. Leaning down. So we just got to wait. We only have 2 hours left. I feel like the clarity right now on this market is not as good. That, like, after this happened yesterday, if you remember, we kind of came out of here and there was like no real bulls in this low because of the the way it just worked out. And we finally found some bears, and then there was this zone here where it was like we're waiting for the structure to sort of work, and it didn't. And I feel like we've been stuck in that zone for a while today, where it's like, I know what you need to do next. Will you please just do it? And the market's like, nah, I don't want to do it. I don't want to make it happen. I don't want to make it happen. And you have these times where you're just sort of stuck in suspense, waiting for the next thing to happen, and your clarity is low. While that I will commonly think of clarity as an oscillator like this, I call it the clarity oscillator. It looks more like this. And you have these moments in the market where things are clear and there's opportunity and everything lines up and it's beautiful, but it feels like an oscillator because the intensity when it's low is versus the intensity when it's high. You could add up all the intensity when it's not clear, and it would be about equal to the amount of intensity when it's high. So you'd end up with this, like, emotionally, you would feel like it was the same amount of time if we're just doing intensity. But if you look at it in terms of time instead of intensity, then it looks like this. Boop, there's just these little blips where you have like 5 minutes, 10 minutes. You realize it, you're getting everything you want, you don't want to participate, you don't want to trade it because your emotions are screaming, but everything's clear, and it all just sort of lines up, and then you can say, okay, I see what's going on here, and you do it. But it feels like, the downtime added up to the uptime. It feels emotionally like a nice smooth wave. It's just, at this point, I don't really see a whole lot of great opportunities to do much of anything at this point until we get this. I'm just waiting for this. This is what we did yesterday, because is waiting for some sort of bullish test, which didn't end up coming until here, and they got pressured. So just waiting on the bulls or something. The last 2 hours into Friday, are the bulls going to want to pop this up? I'll tell you what, if I was a bull, if I had a big institution, I was a main player, not just a participant. Man, if I get to design this, I'd say, well, what I would do is drive this down here, right on the backside of this position, pick up a long, shake whoever used this as a stop loss level, drive prices up to right here into the close so that we didn't get the stop. Tension is right here. So nothing really confirmed right into the close, lots of smoke, difficult to really predict. And then gap it up on Sunday. That way you thin out a lot of the buyers who are waiting for that level, and they're like, gosh dang it didn't work, we didn't get there. They have to close because they're too scared to hold over the weekend, which I would be too. Drive that up to there, close the market, Sunday morning, open it up higher, stopping out that. And so it's, obviously this doesn't open on Sunday, but so price would look something like that. Sunday opens up here, whoop, you get this like nasty spike. and then we can move forward. The point would be that you could optimize that upside by shaking out a lot of the buyers who are buying with you, and you could shake their confidence. Also, getting it on the backside of the highest bear position puts them in a situation to try and buy out of that position anyway, because they're not going to want to hold a loser on a shaky ground anyway. So they'll try to buy out. You know, I think that lines up really well with a good way to, that's how I would close the market. If I had control over it, that's what I would do. Yeah, close it at 39.19. That's I'd close it today at 39.19 and watch everybody kick and scream and squirm, and then gap it up to 39.25. 39.25 Sunday open. Sweep that sucker up to 39.50. Okay, there. That's what I do. Close here, open here, sweep up to here. Yep, that's what I would do. Yeah, let's put the, I'm gonna just loosely say this to here. I'm gonna say right here. You know, like that. Get us through this thing here, because you know a bunch of people have their stops down. Oh my gosh, price reversal that looks like this means support, right? It's like, no, I didn't take it to mean that. I took it to mean the bears made a dumb choice and it folded it right back over, and then drifted back down and went right back to what it was doing before, which was looking for bulls. It's just, they were too eager, didn't work. You see how that put all the capital in there, got put at risk because they ran it too early. At least they'll try. You know, the bulls don't usually try unless they can actually pull it off. The bears will just go for it. Like, they'll just run at it. They will turn that algorithm on, opportunity or not. Even a mild opportunity. They ran for it. Good job. What if I went in and I chopped out all of this and it just connected from there to there? It would look just fine, because that's what it looks like. This was just a little change in character. Then it went right back to what it was doing before that. Still not much going on. No options. The value area is still sitting in that low volume node, trying to fill up orders there. Because the market has one desire with normal distribution, like a value area like that. It's to take the ES contract from its very first trade. And the market wants one thing. At the end of its life, when you expire this contract, it wants a normal distribution. That's it. This is the desire of every futures contract, is to have a normal distribution of volume, because normal distribution means that their market makers and everybody who runs balances and inventory in the background is able to run a, you know, they're neutral. So the goal is to get to a normal distribution at the end of a contract's life cycle. That's the ideal world that they never get. You have a distribution where it's like this. At the end of the cycle, you have a big old huge chunk of people down here who are not neutral. And so the inventories are not great. So they want that nice neutral distribution. That's the goal at the end of the day. Oh, sorry, probably didn't see that. I meant a distribution like this. A distribution like that. Everyone down here, you know, contract went like this, ended here. Well, it need to go higher, huh? A little lower. There we go. This group of people right here are not neutral, which isn't what they want. They want it to look like this by the end of it. Point of control, value areas here. They would love to see price just do this and then close out. This would be ideal for market makers and stuff, just this. But that's not what they get. So these are always trying to sum up to get one big, nice, normal distribution on a futures contract by the time it expires. And everything, basically. We are almost there. Look at that, 3. We got our 3. We're at negative 93. Yeah, still about 150. I think 150 still is about where we could get this to go whoop and get a sample. I think the bulls should pick it up. I don't know why they wouldn't. I think they should drive that up and play it out the way I was thinking we should close the market, because that would be very frustrating for everybody. And they could do it without really a big spike in volatility. So it could sort of be a sneaky bull move. We could just have little tiny moves up, close this right up here, and we don't have to look at that implied volatility spiking up and changing the prices of options and everything. We could sneak that in there and then deal with the implied volatility on Sunday. A nice gap up. That's what I would just love to see. Now, if the bears decide that they're going to go for this right here, what they need to do, and we've talked about this before, your algorithm, which this one totally failed, your algorithm needs to do some work. And the work here is twofold. You got to get through this position, right? We need to turn these guys upside down, which is possible because I haven't seen any, unless that they're trading them somewhere else and my nifty little tool here doesn't detect their volume. Possible. You got to get through this position, and then you have to get to the stops. This is the goal. If your algorithm can't do this work, it's not going to work. It's not effective. So I think letting this come down as much as possible on its own, or maybe, and then trying to run an algorithm to get down to here. If you're going to be a bear, you want that distance to be as small as, but that's the work you have to get done. And then that work, the way it's work is, 1, you got to get this to here, and 2, tension needs to come down. And that's work. You got some work done. You changed the probabilities of the game, and you have just done the work that the bears need to get advantage in this game. If they can't run an algorithm and get any work done, then the market's going to do what the market does, and that's going to what the market's set up to do right now, which I think is close about here, gap up on Sunday, because that's the easiest thing to do. The easiest thing is just find a couple of bears here and go ahead, and it's going to work out that the bears are going to pay. And that will be the bulls, or sorry, they find some bulls. The bulls will do this work. They'll come in and inject a little capital. We'll see tension give us a little curl, and we'll get up nice and close to tension if this can sample those guys right here, right there. That's what we want. This is the one that I like better. I like this narrative better. I could also see a situation where the bears are like, okay, run our algorithm, and it does this, and then there's a bullish sample like right here, and then it just pops out of it, where the bears just get their whole thing turned over. I could totally see that. And it would help get velocity down under 0. Yeah, that makes sense to me. Either I would be all right with an algorithm running into the sample, or it just keeps kind of going down, pick up a sample, and then it would move up. Either one of those I think would be pretty good for bulls. I would anticipate them picking up that position if it were presented to them. Little blips of orders, like just scattered around here. This doesn't seem, this looks like concerted effort to me. Nice, you know, they knew where they're at. They filled, and then you finish up here. This doesn't look like concerted effort to me. It just looks like little blips. I mean, it's just sort of broken up. It's like, well, are you guys gonna pick up everything down here or not? And they're like, we're maybe, I don't know, maybe not, maybe not. I don't know. That's what it looks like when I see it broken up like that a bunch. It just looks like a bunch of confidence. It looks like it's just like, yeah, a little here, a little there. I don't know. Hey, look at that. So this got us up a little bit higher. It really is kind of hard to tell because I can't put a horizontal line here that'll go back that far. I'd have to put it on a lower chart to do that, but you can see it's about at that level that we were looking for again for that decay retest that we were looking at earlier today. And you can tell because the red dots moved that you can see that this is now the highest spot there. There's just not much to do. There's not much to be done here. Either you're long from somewhere much lower. If you're trying to initialize a new trade in this area, in this game, again, teeth. This is teeth are a thing. Keep your eye open to teeth and make sure that you're mentally prepared and you're thinking about those things. And it's just, there's nothing to be done. I think if you're trying to pick up, you're trying to pick up positions and you're doing this, you end up being forced saying, oh, my stops are going to be down here with these guys, because there's not really another choice. This is not an effective spot. It's too overt. It's too obvious. It's too clearly designed to build liquidity. We shoot down there and stop out anyone who is long. That's totally producible liquidity. So if you have your stops down there, you absolutely should be very unhinged right now. So I have you're trying to participate here. There's not much to do. You just sort of have to wait. Once this shows up, that'll be your best opportunity there to participate with these guys. And we're not exactly sure. Okay, make sure you plug it in, okay? If you try to participate with them before that things are really clear, which I think this is moderately clear, then the door's locked. I don't think it's locked. I think he just doesn't want to open it. Yeah, it's moderately clear. That's the last thing I remember, is that these bulls will come in. I think it's much better here. Okay, I'll help you. Maybe it is locked. It wasn't locked. So I mean, like moderate clarity, and you're trying to pop in here before that we get, bull sample and stuff. It should be okay where it's at. Go try again. If you can figure it out, good job. I'm just not sure the case. Okay, cool. I'm not sure that the case is good enough to say, oh, just buy here. Like, this is clearly like amazing. I think there's definitely a case to say, if the bulls come in, this is pretty good. Like, the setup here would be really a good situation for the bulls. I just don't think that it's good enough to just jump in and think it's amazing yet. No. Oh, yeah, it is. It's 1, 2, 1, 2, 12. But it needs to look just like that with a 1, the dots, and then 0, 0. Okay. Okay.
I love this skit too.
I know. Just nothing to do here. This is really slow. This is a slow spot. You could see that. Grab a paper. Well, you just grab like a paper towel or something that you can use. It'll work. You're not too small. See, you weren't too small. Yeah, buddy? Be careful not to fall over on that thing. All the love will come out of it if you break it, yeah. You got it. Just be careful. I think you can do it. I think you can. And who's right, you or me? You can do it. I believe in you. You can. All right, 3. We're at 3. 90. So close. So close. Come on. Hour and a half left. We just need one sample. That's all we need. That's it. Then we can move this narrative forward. We've been stuck in this narrative hole for this whole area here. One sample, and we can move things forward. We can get a good idea what the bulls are thinking, and we can see, start to go, I see what's happening here. Yeah? No, I think you can do it. Don't erase the 100 there, because that lets you know what time you can start watching TV. That's what it looks like. Well, maybe grab the marker and fix it. You remember what it looks like, right?
And gone. And I got dots.
Oh, look at this. Not a big thing, but
Like the
this
board.
kind of seemed like a bunch of orders, not necessarily like large, but it looks like you're doing really good. Look at it. You're almost done. You got like half of it.
But I can't do it.
You can do it. Just keep trying. Can you keep trying on the whiteboard? Can you keep trying? All right.
Stop sneezing. Okay.
I'm looking for more data points, but we've gone over all of them. The upside, the downside, the objectives. We just have to wait. And if that never comes, this will just continue into on Monday. Probably move up. Huh? No, you can do it. I know you can do it. You just got to keep going. No, use your hand. No, one will work. Just one will work. Keep going. You got everything on the top. Just keep. Yeah, look at. See, you made progress. That's how I know you can do it. Yeah, Pierce?
It's too big board.
It's not too big. If you can reach it with your hand, you can reach it to wipe it off. He's trying. He's trying. He's gonna do it. I know you can do it. Look at that. So again, right there we have our, it's pressuring this right there, giving our little, so if it's a decay retest, this is trying to keep going higher. That might frustrate the decay retest people sitting right here. Yeah? No, if you can reach the line, you can get rid of it. I know you can. You're doing really good. You got most of the board done. You just got to keep going until it's all gone. Hey, Pierce, how do you get there? You keep going. If you want to get that all wiped off, you just got to keep wiping it. You will get there. Keep going. You can do it. Just get all the stuff. Let's see if there's anything happening with our the tick. Nothing. It's nothing. Just sort of hanging out. 568. That's the same pivot we were looking at earlier today. So nothing's really changed there. Just waiting on those bulls. That's all we're doing is waiting on those bulls. There's nothing else to do. Unless, I mean, in this situation, you're either long from down here and you're holding, or if you're trying to play with these guys, you got to make sure you get that right, the structure in there correctly, and you see the activities you want to see. Yeah? Oh, did you write the 1 o'clock? Job. The little flag there on that one goes on the other side. Hey, this is what I was talking about the other day, the little 1 flag. Okay, this little flag right here goes on the other side. Here. You see how you did that right there? Can you draw it again on this side?
Mm-hmm.
It goes right here, like that. It's a little bit more like that. Perfect. That's a really nice looking one. Good job. See, you wiped it off. You can do it. You did great.
Daddy?
Hmm?
Yeah, 1,000 years more time.
Okay.
A little bit. And, hey, Daddy?
Maybe this can make us a little bit of progress here. Help you.
This.
Oh, I know you jump off that. I've seen you jump off stuff twice that. 2 times that. I've seen you jump off stuff this high. And that's only this high. You can do it. Show me. Just hop down right there. You just gotta hop.
It'll hurt.
I don't think it's gonna hurt you. I think you're gonna make it. Right there. Jump right there. Show me. Show me you can do it. Show me you can do it. Show me you can do it. Ah, see? You could do it. It's awesome. You're welcome. No, you can wipe off the whiteboard. I saw you do. Really, you look at how much you wiped off. You know how to do it. You're good at it. I don't think you need my help for that. I think you got it. Help you wipe it off? You need someone's help to wipe that off?
Me.
You're so good at that. You don't need my help. You can do it. Look at that. It's great. It works really well. You got your help. Are you helping yourself? You can't. Look at the whiteboard. You already did. You did that. You helped you. And you did great. Yeah? Can you just be careful? I think you know how to be careful, right? You know how to be careful, buddy? You just make sure you're paying attention, and I think you'll do just fine.
Stuck.
You don't look stuck. Not even a little. Not even a little.
Window off this window.
Yeah.
I want 2 windows down to white. I want them to white. So there's no more windows. I can actually not drop that. I don't like that, but I'm gonna darkness when, but there's darkness coming on something else. Is that darkness, Daddy?
What darkness? What are you talking about? Like the black marker? I guess it's darkness. It's not really darkness. It's just black.
Yes, but it's dark, like the dark outside.
Okay, yeah, sure. It's dark like the dark outside.
The smaller one? The smaller one?
You gonna do a smaller one?
This
Sure, I like that one.
um
This is turning out to be a really boring close. At 3. But look at this. We've gotten a little closer here, so, you know, a move down like that could get that over. We could be just right about there, maybe right under it. Could line right up with a sample. Yeah? No, when that says 1 and you still have a couple minutes. But you're gonna need to keep your eye on the clock to know when it happens. Not yet.
Yeah?
Not yet.
Joking.
I'm not joking.
Stripe here. Like
The scrape on the whiteboard?
yes, those are scrapes from the cat. Remember the scrapes? Like paws? Yes, paws, Daddy? Hey, Dad?
Yeah?
What are these paws that are on the cat's paws?
I don't know.
Inside you.
Oh, claws?
Mm-hmm.
Are those the claws on the cat? Yeah, you gotta be careful. Cats have claws.
Yes, and humans have claws too.
Oh, humans hardly have claws. We have fingernails.
Flat. And paws are flat too. Cats have round paws. But a hole looks like round. It has filled up like a O. Like these. Hey, Daddy.
Hmm?
Like a black hole. Like this.
Yep, they look just the same.
Yes, they're black holes.
Just the same.
Black hole is just a drip of water. Standing a strange bunch of like a cloud. Do you like clouds?
I like clouds sometimes.
And smile at the clouds. That's what it is, Daddy. Does this look like 10, Daddy?
Yeah, that's a 10. You drew a 10. Nice.
Daddy, we look at the clouds and smile at them, okay?
It's past 10. 10 was like 2 hours ago, 2.5 hours ago. We already missed 10 o'clock.
Oh!
It's gonna be 1 o'clock.
Cereal? When it's 4-0, then we eat cereal. 4 looks like this. Does this look like 4, Daddy?
Yeah.
This one?
Yes.
Let's see what's the 4.
They're both 4.
It's and 0 eats cereal, Daddy. We both eat cereal. 2 of us.
I don't want any cereal. I don't want any cereal at 4 o'clock. You can have cereal.
Cereal? 4-0, then we eat cereal. Me and you, Daddy, we both eat cereal.
Oh, I don't want any cereal. I sell the 4s.
Outside and then outside looks like a cube. Do you know the cube, Daddy? That looks like this, Daddy?
Where? Yeah, that's a Q. It's an uppercase Q.
If you draw a one, it looks like the O.
With a line down the back. No. Like this. No, let me see the pen. I'll draw it. This is a Q. This is a big Q. A little Q goes this. That's a little Q. That's a big Q.
Big cube? That's
Well, you already have it right here. See? Circle Q. That's a good one. That's a really good Q.
Yes.
Good one.
This looks like this, Daddy. What's this cube? This one has a line down here.
Okay, so the only thing I'm seeing right now is this compression. See that? We're getting compression. We're bringing that volume area in closer. So that happens when volume starts to focus more in that area than it is outside the area. You could do it. Looks like a little drip of water. Show me what you think it looks like. No, it was like a point at the top. It's like an upside down heart shape, but you don't do the little thing, the little inside pokey. You were doing heart shapes the other day. You remember the heart? Just flip that over.
What is part that's upside down?
Well, an upside down heart, if you don't do the little, the heart has that one. You just don't do the little inside poke. You just go like that. But you turn that over, so it looks like that. Give it a try. Give it a go. I just did. Now you try. Try. That's pretty good. It's tiny, but yeah, you did great. I knew you could do it.
Then how was this one?
Where? It's still tiny. You keep doing tiny little drops. You're going to do a little bigger.
But does this look like a heart?
Yes, but you see the top one on the top, how it pokes in? If you just make that smooth, like the top of a circle, then flip the whole thing over. So you just have a nice little, instead of doing this, go, and then flip it over and you have a raindrop. Try. Make a bigger one. That's a little tiny smudge. Make a big one.
What is this one, Daddy?
Which one? That's like a half smashed Pac-Man that's laying on his back. You made Pac-Man. That's Pac-Man.
We'll try to make.
You got to make the raindrop shape, like you were saying. The poke on the top. So it's like that.
Daddy, can I show you how to make a pineapple? Can I show you?
Yeah, draw a pineapple. Where did you learn to draw a pineapple, Pierce?
At school.
At school? You guys were drawing pineapples at school? So at this point, this looks to me like these bulls are not getting their position. They're to some degree being held out. We just need a little bit of oomph out of this market. We could pick up that bullish position. It's, you know, it's coming down and just, it's like the volume's there and they can't get it. They can't reach. They're not getting close enough. And it's because there's some sort of, upside force that's keeping it away, because this, velocity moves all over the place. So having it come down right next to zero and then having it stop moving like this looks to me like the bulls, they're just not getting that sample because it's being held away from them. Either they're not ready or it's just not prepped. Nobody has the volume ready. So they're sort of being held out of that liquidity position right here. It's not happening. The reason that I won't, if I saw this and there were no bulls the rest of the day, there was just none, then I would say this is a problem. You can't have bulls being held out of their position. That would suggest the bears are in charge, right? That would say to you, the bears are keeping you out of your position? Who's in charge of this market? So this morning, because there's this position, which I did screw this up this morning, I apologize again, sample volume, because this is here, I'm not leaning towards that, why are they getting held out? I'm leaning towards, why aren't they quite ready? If there was no position and the bulls were trying to get one, then I would be a little bit more concerned. I'd say, who's in charge here? Why can't you take up a position that's just an inch away from you? How come you're being regulated out of that by your master? And that's an issue. You can't have the dominant party taking orders from the subordinate party. Does that make sense? Am I being crazy here? Like, you understand? But because they already have a position, it's not quite the same thought process. They already have one here. And so they're just not quite ready for it. They're being held out of that sample. Just maybe they're not ready, or maybe it's not the easiest thing to do. Maybe they just don't want it. So you have to look at these samples when you're expecting a sample and then it gets very close and doesn't happen. You need to question why, because typically things happen right when you think they're going to happen. We get the things we're expecting. If you're doing this right, you pretty much always get just exactly what you wanted. You get the samples you want, you get the moves you want, you get the stops you want. It all lines up. This, you didn't get it. So you have to question, is this the bears telling the bulls what they can and can't do? And regulation's a big part of control. So you have to look at that way. But because the bulls already have a position and they're not underwater or anything like that, then you could say it seems like the bulls just maybe aren't prepared, or what they're planning to do is run the clock. We're just going to wait until the market is closed and then we get the sample, and we'll run that on Sunday, and good luck. Nobody else gets to participate but us big boys. That's a little bit more what this looks like. But when I look at this and you see it got so close and was held out. Why were they held out? This is, in my opinion, intentional. I don't think that is accidental. The velocity number will oscillate around when you get points where you are expecting that sample and it's at the price you expected and everything's lining up and then it's held out. You go, why didn't they get it? What happened? Why couldn't you pull? And the answer is either they're being held out by the dominant party, by the bears, that's without, or because they already have a position, they're just not ready, or there's a ton of orders down here and no liquidity. The market's like, we can't provide liquidity for that. Sorry, well, can't have it. So a dip down would execute too many orders. They don't have the liquidity to provide for it. So that's it. Hold on, Pierce. Can you hold on? Can you hold on? You got 9 minutes. 9 minutes, and then you can watch TV. Okay. So that's the way it looks to me. It looks like the bulls are sitting here in the market. Yeah. It's time to talk. It's always time to talk about markets, Pierce. Always. Okay, so hopefully that makes sense. I know I've been a little distracted here, but I want to explain the way that I view what this is. The market couldn't provide it, or they're being held out. And the way that I filter that as well, are the bulls in and holding, or is this, are the bulls, maybe if price had come down here and it's like, wait, so the bulls couldn't pick up a position and they're underwater and they're losing and they can't get a position, then I would start to question who's in charge. But because they're already in, I assume there's just like, yeah, we'll add, go ahead, hit it. We'll go ahead and add. And the market says, oh, we don't have that liquidity. Sorry, I'm having a hard time manufacturing the liquidity that you're trying to demand from us. And so that's the way I'm looking at this right here. And especially with this slow market, it's just like, it died off. And so a lot of participants maybe left, and that's why we can't get that liquidity to pop. I know, buddy. Why don't you go sit down over there and wait a little while? You're almost there. Keep your eye on that clock. So that's the way I'm interpreting this. I see this sort of difficulty here. They're not a concerted effort on the portfolio orders. We're not getting the liquidity we were wanting, even though we had the prices, the timing. So it's just waiting. Oh, I got a whole another hour. I can talk and 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 talk.
Talking.
Well, I'm not, and I get to do the talking. Can I do my talking?
Mm-mm.
I'm gonna do my talking, okay?
Now.
No, I'm gonna do it right now.
Not right now?
Well, what are you gonna do?
Do not talk.
I can't. No. You can't make me not talk. This is what I want to do. What am I gonna make you do? You can go sit down. You go play. You got a lot of stuff to play with. You got all that Valentine's candy from those girls. So you could go eat that. It's pretty lucky. So markets come down. They can't pick up that liquidity. A little irritating, kind of frustrating, because if you're trying to participate with the bulls right here, the logical problem that you should naturally come to, especially if you execute an order right here, it will immediately become apparent to you, well, what if now velocity samples? And you're right. That means that we could have price do this. You're at risk of just getting rolled over.
For you.
No, thank you. You can have that lollipop. I think it came from a cute girl at your school, and it was for you. So if you try to execute here and you try to participate, you could potentially get pushed out and become liquidity. So this is a difficult spot to be in. This is why it's sort of a hold scenario until we get the things that we want. This is a logically difficult spot if you're like, I really want to play and do something with this into the close. Careful, because we could still get the things we want out of velocity, and I do tend to get the things that I want out of the market. I tend to get exactly what I asked for. Sometimes I don't get it the way I wanted it. Like, I wanted bulls to show up and they waited until the next day, but I did get it. Do you need help opening that candy? Who gave you this?
Oh,
Elena? Who's Elena? Who's Elena?
yeah.
Yeah, but who's Elena?
Play.
Really? Does she sit next to you? Are you friends with Elena?
Try it out.
No, thank you. That is for you from Elena. Yeah. So, yeah, there's just not much going on here. I almost feel like this is inoculation, this whole thing, because these sellers are upside down. These ones are sort of winning a little bit. These ones are winning a little bit. Everybody's getting entrenched in their positions. There's nothing to do. There's no progress in this narrative. None of this has, so it's sort of inoculating people. You have to constantly be asking yourself, am I right? Am I wrong? Am I right? And then you sort of move yourself further into a direction. You know, if you're in a position if you're here and you're short and you see it, oh, I'm such a huge winner. I'm a loser. I'm a winner. I'm starting to lose again. That's going to mess with you. And if you're in here and you thought, oh, it's fine. It's not fine. It's fine. It's not fine. It's fine. It's not fine. Cool. Who's the other one from? Oh, Sophia. So I think this is a little bit of inoculation, pushing people further into their positions, which is useful for widening out range potentials. You keep them there and you force them to ask these questions over and over and over. So they'll move their stops wider, they get further entrenched, and they believe more and more and more what they're in. Now, I'm still bullish about this. I still think that bullishness makes more sense here with the structure and what's happening. But there's just not much to be done about this because you're constantly going to be faced with the fact that we have an hour left, and that is enough time to drop down and grab up some bullish liquidity. And that bullish liquidity could be right here, which I think if everything goes perfectly, I would drop down, grab that, and close it up here. It would just, yeah, it is so good. It would be the absolute most destruction you could do in this market. It would just really be hard for pretty much everybody. No, thank you. I don't want that one or this one. I touched me with a wet lollipop. Those are for you. They're from girls that like you. That's the sugar. They're not for me. Those are not for me. Those are for you. Yep, still not much going on with the options here. We saw that little, I thought it was kind of interesting, just like a lot of activity showed up on both the puts and the calls. Just at the same time, they were like a bunch of people doing things. They didn't seem like that large of orders, so not all that interested. Still having this compression here. This low volume node, which looked like this earlier, is now moved up. See, they're like, get rid of those low volume nodes. We don't like those. They're dry zones.
Are you gonna eat this lollipop?
No, I'm not going to eat that lollipop.
So, it's for you.
No, they didn't bring them for me. They brought them for Pierce. It's looking like a real slow close. A little skeptical of a move up here, just like a pop up. Not skeptical that it's bullish or bulls or whatever, just that there's just not much you can do with it because you didn't make that. You made that? What did you make it out of? Did you draw this?
Mm-hmm.
It's for me. Thanks, buddy. But I don't want the candy. This candy is for Pierce, and this is trash. Oh. That's a lot of sticky stuff. So skeptical because there's just not much you can do with it. You can't say, oh, I'll move up here. Definitely you can act without worry. But that's just not true. There's still plenty of time. This could do something like this and come back down and do something. So you're having a hard time logically holding on to something prior to this getting sampled. It's just, that's the logical problem you're in. And it's really messing with your head to be stuck in this situation for so long and constantly be iterating the thought, what's next, what's next, what's next, and seeing no narrative progress at all. We got to a point, we had something interesting, but it didn't make a difference. And then we see just there's nothing, just a void of data. And we're just waiting. Hi. He's not going to be able to resist the camera. All right, so we are back to our Voltiwop, which mean reversion until that really makes a difference, until that changes. Can you put this in the trash, Pierce? Can you go put that in the trash? We'll continue to have mean reversion expectations, which is basically what's been happening. There's just nothing else to do. We just have to wait. We're forced to wait. No, because you can't help your little self. It is 1 o'clock. You can watch TV now. Let me get him set up on TV. I'll be right back. Just Okay. No progress. Man, hardball. This is tough stuff. This is tough. There's nothing easy about this. This is a situation where you have to ask yourself questions that are difficult to answer. Oh, you're like, well, I'm bullish about this. I definitely, but you don't want to get stuck in a situation where you're executing and it folds back down and moves up. And that's the predicament that you're being put in right now. Everyone's being put in this predicament. Either you're already in or you're stuck in a pickle waiting for this to happen because they couldn't pick up that liquidity, which I'm not sure what that even means. Like across the board for a little bit longer term, is that all I look at that is to determine if it changes who's in control of the market. As far as I can tell, this does not change who's in control of the market. It's bulls are still the ones who are running the show here, but they did get held out of that position. They could not get it. So I'm still think up. I still think that 39.20, yeah, 39.19 would be great. That would just irritate so many people because it's not quite what they want. And then gap it up on Sunday and run the market a little higher and hit all those stops. And then you're like, yay. And then we can go on to the next thing and maybe get a new narrative going and get the market moving forward. So this is moving away. I mean, come on. It's like, gosh, bulls, don't you want to play? Don't you want to pop in here? They could have legitimately grabbed some liquidity right here, had these two positions, and then started to pop this up. And if that was the case, I'd have been like, oh yeah, this is headed up. It's like the game is done. It's over. They pulled it off. Didn't. So we just have to wait. Nothing new here either. The tick hasn't changed its story. The advanced decline, this going on here, just pretty good run, but nothing amazing. And this is the ADD, so it's not going to line up with this one, as I'm using the C, the composite. So that's the ADDC is the one that I'm watching here. I like to look at the ADD for algos on a 1 tick chart. And I like the ADDC for momentum on a 30 daily. I just think they work better. Or maybe we get over this inversion level, test it, and then we just had a messy, difficult time. I'm gonna eat a cookie though. Nope. This is just waiting. This is gonna be terrible. If this just sort of drifts around right into the close, something like that, or even it just set, it's gonna be like, really, you gonna make us sit around here for an hour? When you got this nice setup in front of you? Because it's Friday, jerks. Hey, sometimes that happens. It's vigilance that gets you into the good ones, though. You gotta stick around. As long as you know where the opportunities are, you just gotta stick around and make sure you're available when they do show up. Because I'm pretty sure about here, probably right about here, a lot of people just got up and left, and they're like, I'm done. I don't want to do this anymore. And that's probably what happened. Tension +3. If we get, I don't know, we get here, maybe we get a, even that. We could get, you just got to get that tension to make sure it closes up. I'd love to see it's a +1 right at the close, because that's one of those things that's super tough to deal with. You have your tension number right next to 0, and you're like, oh no, tomorrow it could pop up and shoot. It's like, yeah, it could. It could. And that's really difficult. It's not quite a 0 test, so you're not quite ready to try and see if the bears are going to defend it. Put you in a position. I still really like that idea, but I'd really like it even more if the bulls would go, grab us something and then get us up there high. I like that a lot better. Maybe the market's thinking liquidate them to a bear and then pick up a bull. I hope not, because I don't think we have enough time to do that. For like 45 minutes. It's just not enough time to do bull. But that could work. I don't think it's as sensible, but it's doable. Yeah. Yeah, buddy? Yeah, buddy? You ready to eat some cereal? You don't want a bowl of cereal. You just want a bowl? For lunch. Bowl of Cheetos. I'm going to get this boy a bowl of Cheetos. All right, we're on the back side here of this decay retest, which is also the tick high. So we're moving on the backside. These guys are going to start sweating a little bit here. And they absolutely should be. Look, they didn't get the work done. And now it's back and they're upside down. It's like you've exhausted yourself already. Like I'd be sweating bullets if I was short and I had done all of that and got nothing but the market to move right back up against me. So it looks to me like these guys are under pressure. These guys are feeling pretty good. They're like, you failed. You guys didn't pull it off. Too bad. So sad. Tension just keeps inching its way up closer to zero. These bears are not doing great. They're doing poorly. I'd love to get a bullish sample, but I mean, with 45 minutes left, rolling here, we could have a market just kind of hangs out and then just takes out the bears, and then you're like, well, I wish I could have gotten in there with them, but there wasn't much opportunity to do that. But these bears are definitely feeling some pressure. I'm not sure what their reaction is going to be. Are they going to try and dump? If they dump, the market will likely just keep going up. What would cause a sweep up, I think, is if you have a scramble, which is really when the buyers and the sellers want the same contracts. So if the buyers were trying to buy right here while the sellers were trying to buy out of their positions, that would just give us a sweep right up as they all just try to grab the same thing and they can't get it. And then price would move up out of that. Otherwise, if it's just one party who's in trouble, this could take a little while. We just sit here, watch it moving around on the back side of their position, and we're just waiting while you're, wondering why on earth they didn't pick up a secondary position. Why do we get a root position here and we didn't get a secondary here? I don't know. It would have been nice to see a secondary already in this low. But I suppose I could also see a world where the bears decide they want to drive it down and close it here, and then it shoots way up on Sunday, which would be sort of annoying because it's just annoying. That's annoying behavior. And the bears like to be annoying. Like we've seen that twice this week. Well, the bears say, let's run algorithms into a bullish position, which immediately recoils and folds over all their hard work. Potentially. I think if you ran an algorithm, that bullish test, like if you just hit this with an algorithm, I bet the bullish test it would be about right here. You'd get that bullish test. Yeah, if you ran an algo. They wouldn't get all the way down. They wouldn't like get really far down. They would just get maybe like here. And then just for fun, another dip down. That would work. Yeah. Yeah, that could work. We get our bullishness here. We give it a little toothiness that pushes right through this thing here. Pick up just extra little bit liquidity just because it's a secondary, so it can be toothy. That could work. If the bears came in and did that, yeah, I could see that. I can see that working. It's not the scenario I wanted, which if you remember, I was really hoping the bulls would get something here and then, just drive it up and close it here and we could gap up. But if the bears decide to run an algorithm and we get a tooth, that could also work. But the upside potential on that's less. Also, we wouldn't get tension making its way up near to zero. We're running out of time here, so I'm almost thinking like +2 would be great. But the way it's happening, personally, what I think has happened. This is what I think happened. I think that we saw this move up. Mentally, a lot of people saw what they would call it a tabletop. They said, my goodness, this is a tabletop. And tabletops tend to be tops. And this algorithm here really triggered some folks who probably shorted thinking that the price action pattern was all there was and that everything can be described with price. That tabletop really worked and moved back, and that really is stressing them out, and they're getting inoculated, and it's not advancing their position at all. Probably a lot of people did that. But just the way this is looking, I'm thinking that caused a knee jerk out of just the retail market, who was just trying to find something to do with their money. And that may have also been why the market didn't pick up a bullish position. But I could see that being something that people would look at and say, oh, it's a tabletop. You know, and then what you do is you don't mention it. You don't say, right? You keep it quiet. And then if it goes like this, right here, you get to brag. You get to brag, you say, I saw a tabletop. But if somebody asked you here, you'll never say, because that's just what people who chase price action do. They trade it, then they keep it a secret. They say, I won't tell anyone until I'm right. And that secrecy is a big old fat tell to yourself that you're being stupid. You should be willing to say exactly what you think at every given time, whether you're bullish or bearish, or you think upside or downside, or if you're in or not in. But a lot of times I've noticed that price action traders tend to be very secretive about the price action they observe until they're right. And then they'll expose how right they were after it's over. And it's like, if you didn't say in real time, you're a liar. End of story. So we're moving up against these guys. We're on the backside. We're getting over this inversion level a little bit here. We're getting on the backside of this position here. I think these guys are going to start sweating bullets. They're going to feel that pressure. They're going to say, oh my gosh, our algorithm, it didn't get the work done. We failed. And the market's going to say, tisk, tisk. Probably just keep grinding up. At this point, I mean, there's not enough time. We're out of time. There's a 30 minutes or so left. I just think we're out of time. I think it's just we're out of time, and this is just going to keep grinding. Most likely, it's just going to hold them underwater and put them in that weekend logical noose where that you can't choose. It didn't move far enough for you to think that you're wrong, and it didn't close so that you're profitable, so that your only choice is to lose money or lose more money. And nobody, when you're triggered, or when you can't solve this problem. You can't say lose money or lose more money when you're not yet wrong. No one can solve this problem in real time unless you have expectations or rules or something. You'll make the wrong choice. You'll always say, well, then lose more money. And this logical bind is one that everyone gets stuck in, and you will see it with every trading strategy. You can lose money or you can lose more money. These guys, if we close this market right here, which is, if we get that, cool, okay, that's good. It puts them in that spot. You can just close and take your couple points, or on Sunday, you can take your huge loss because it's lose or lose more. And it's that apparent window of market crashing that will keep them from making the right choice. It's like you have this the game theory tree or something, and you just end up at max loss. It shoves you into that. You'll optimize wrong in your head. People do it. It's normal. It's human. The trick is to make sure you don't get in those situations, or every time you're in a situation where you recognize you're in that, you just close. You lose money. You don't lose more money. And if you can do that, then you can cut down on your losses, which is good. It'll help you be more stable. But I think that's the position that these guys are in. Half hour left in the day. It's lose money or lose more money, baby. And they're probably going to do the wrong thing. Let's see. I'm again going to check out the tick, see how that's holding together, and absolutely just totally boring. Options, no in the money puts to hedge out the bullish positions that are up right now. These are probably people trying to sell calls. I assume they're trying to sell calls, saying, thinking the market's going to come back down or at least stay ranging and stuff like that. You know, sell calls, rent out your position, become a renter. Last half hour, look at that. Look at the velocities of 5. It started to come down even with this going. We're getting a little bit closer. Are we going to get, maybe we get a bullish position right here? I did not expect that. I would not expect that. If we pushed up a backside of there, got ourselves a bullish position, that you got me. I did not anticipate that even a little bit. Come on, let's see what you can do. See what we can do. I feel bad for the people who make these types of decisions. Where do we get liquidity? Do we buy it? Do we sell it? Because I think it's very difficult. But I don't think they do it alone. I think that the major market players vote on positions. I think they collaborate a lot. They make a plan. They execute all of their assets across the market to make things happen. And it's a big, huge team effort. It's not like one guy sitting there trying to consume and stuff. That's just a story little hedge funds tell you. The real market players, the ones who actually matter, I think they vote, and they'll vote like a day in advance of what prices they want, where they want it to go, what they think is going to happen. They're not always right, but the voting means that it's very planned out, you know, what they want to do. And so you'll see markets sometimes where you can just tell the floor trader got a phone call and his job was to do one thing and one thing only, and that was drive price up to fill that 2,000 contracts, and you have no other job. And the market just shuts its brain off and goes. And you're like, why? Why did you do that? It's like, sometimes we don't have a choice. You do what they say or you lose your job. So we'll see that every once in a while. You usually tell, if you have a footprint chart, you'll see it. So we're just churning up against this position. So it looks like we're not going to get ourselves that bullish sample with the last half hour here, and we're just going to churn up these guys, or squeeze, I guess you could say. We're getting above here. We should see a backside test again on this this pivot, and then just a grind up for the past half hour, I suppose. Let's check. Yeah, it's still there. 568. That's the high on the money tick. It's called the money tick because it's money tick. So we're still good there. Yeah, just looks like that's our game plan. So we're going to get I think we're probably going to get some sort of a close that we wanted right about here. We just sort of hang out and just did that. We trapped in the bears. They're underwater. They don't like it. They're uncomfortable. We had the bullish position off the open, stay good. No insurance on it though, which is, I'd love to see some puts come in to help support this low. Otherwise it'll, you know, it's still going to be open there. Yep. I'm losing interest in this velocity test because we have a half hour left. It's like things take time. You gotta drive things in directions. We gotta have people pick it up. We have to have time for the volume to fill. We have to have time to maybe work over the other side of the market a little bit. We're just sort of out of time. Just out of time. They could have done it, unable to pull it off, or didn't want to. We're out of time. I think the last half hour will be probably just hanging out up here you know, maybe something like that or whatever, just sort of chilling up in this area. I think the most devious thing the market could do into the close is to not push a new high. I think that if we close right about here, I anticipate the market to open higher through those stops and then sweep up right after the open to fill, just screw everybody over who was holding. And then we come back and we just sort of hang out. But volatility traders dumping are bulls, Joe. That's a bullish thing. But your angle is probably, you know, you're probably right. Since we didn't get the bulls to come in here, we had them this morning. They set it all up nice for us. Perhaps Joe's right. He's saying he thinks it's the volatility traders dumping, which that's what this would do. But we didn't get our bulls to come in, and perhaps that's why. Maybe they just couldn't get in front of the volatility bulls who were like, get out the way. Nonetheless, this is still structured. You know, we still can see the structure here. We know that these guys got their stops there. And we know that the most devious thing you could do is close that right here. And they're going to be in a pickle, and that's a very difficult position. We could gap up on Sunday and then wipe out everybody all of a sudden. And it's like, oh my gosh, we could do it now. Yes, possible. But if you want to thin out the people who you're competing with for capital, you hold off pulling the trigger until after the close, because 60, 70% of them are going to dump right at the close anyway. And then your opportunities go, you know, your opportunity distance gets higher because they're out of the way. You don't have to pay them too. The point being, even though this is kind of close, you know, with 5, last half hour, I'm skeptical that we're going to get any move back down to pick up a long that I would have loved to see into today's close. It would have been just beautiful, juicy, but we didn't get it. Just bullishness. I'm still thinking 39.19. The devious price. Not high enough to tell the bears they're wrong and not low enough for them to close a break even. So they'll hold for a bigger loss over the weekend. That's the devious price that I think would make the most sense to close at. Otherwise, probably just pop up here. And I wish there was a good opportunity that had happened here. Something, you know, the bulls come in or something like that to play with. Just didn't get it. Just didn't get it. Are we getting to our 19? I'm watching this for my 39.19 price. That's the one that I like. I like as the close. Close it at 39.19. That's such a difficult position to be in. We got over. There we go. This is the place that I think, you know, market closes here. This is good. This is good. Okay. You don't want to wait for Sunday. Fine. All right. So what do markets look like when they run through stops? You should know this one. When you hit a stop, and a stop is two things. One, you expected it there. You have anticipated a stop there. It is not just any old sweep through a high. That is not a stop. A stop is where that you say, there are stops here. I know who they are, what they're doing, everything. You see it, hit it, you get a sweep. So we've got two groups of stops here, and they could capitulate into one another. This one could drive this up into the second set of stops. And we've been tracking that second step for a while. It's this whole range we've been in for 3 days. That's where all the bears have their stops at. They're just sort of sitting there waiting on that. So we popped up, we're hitting the highs here, getting just through them. And now we need a nice, you know, it'll look like you'd be watching this thing and it says 21 and then suddenly it says 23 or something like that. And then you go, oh, there it was. You know, we had the 19 up to 20. It was a little bit of a tick up. I think this is about to get ugly as we push through those stops. Now remember that when these guys get blown out, it provides liquidity. So bears have the opportunity here to attempt to sell off that liquidity. You can't neglect that. But because there's stops just above, my expectation is to see the market orders used as these people fill at a loss to try and get up and hit that second set up there. It's not necessary. It's important to remember that this can convert into a bearish position right here. That's how decay retests work. Their stops can be used to generate liquidity, but in this instance, I have a different idea because of what's been going on the last couple of days. I think that this should sit here. 21, 22 as all those market orders come in and the buckets are getting filled up. It's like, here's my bucket of market orders, and then you turn around to the market and you go, and everyone's like, well, how did you do that? And it's like, I just bucket ordered a bunch of market orders, and we all didn't collude to have them hit the market at the same time and wreck institution. We didn't do that. Or did we? So we're at the first set. Second set here, our bullishness. See if we can do it. Let's see if we could see the moment where it's like they dump the market orders onto the market. This is pretty good. I mean, seeing this pop up like that right through these highs, we're expecting stops in this area. This looks like we're getting what we expect. Now with those stops up here, again, so keep it. You need to know what you expect. If you're not expecting stops there and then you see stuff like this, you need to go, what are you doing? Like this one, remember? We saw this here and it was like, what are you doing? Like we understood what it was. And so when we saw the sweep, it wasn't a misinterpretation. This one we're not misinterpreting. We know that this is going, we know that there's stops here, and I think it makes a lot of sense to press on up and hit the next group. We've been staring at that group for like 3 days. The mouths watering. Just hit those stops, please. Please hit those stops. Oh yeah, Volti-Wop's coming up. So, and this lines up with hitting stops. You got volatile volume. And that's, we didn't have any, and now we're finding it right where we thought it should be. That's useful. It's not useful to just see it happen and assume backwards. You say, no, we've been tracking this for a while. This all lines up exactly like expected. We're getting everything we wanted. Today, I would have liked more here, but in the end, it wasn't necessary that it happened, and we're getting everything just not quite exactly like the way I wanted it. I wanted a little entry there to have some fun and participate with, but that's okay. 22. So we're just going to put, I think this needs to go up and hit that second group. And the reason for that is market orders have a shelf life too. You can't say we're going to trap up the market orders and hit them on when the market reopens on Sunday. No, you have like a few seconds here, a few minutes maybe, to get your bucket filled and then jump it on. We should see this pop up right up here. I don't know, ES, SPY, 3092. I didn't mark it on the ES here. Let's see. No. Where is it? Oh, we already put here. Here we go. Here it is. So 39.24. It's basically there. Maybe a little higher. Maybe they did the highs 39.25. We'll say on the ES. So 39.25 probably will have taken out every order in there possible. The SPY you could see taking a little extra time here at the 391.90 or 92.14. Pretty much got it all. There you go. Pretty much got it all. Cleared out all the stops. They capitulated. The first group smashes into the second group. So now the question is this providing liquidity to the bears? Are all these orders we just obliterated in one fell swoop on the way up gonna provide volume that can be packaged and sold to the bears? Tough question, isn't it? We see the volume. We know the levels were hit. We know how liquidity works. I wouldn't. If I was a bear, I wouldn't do it. I wouldn't sell this into the close. I wouldn't. But because we hit both levels here already, where are you going to go now? And I don't particularly like new all-time highs because creating the justifications for things to go higher and higher and higher gets more and more difficult as you move up. It's not as clean and easy to understand how it works. So as we get up here, we're getting to new all-time highs. You know, the highs are right up here. So we take out all those highs, and we still haven't quite got to 25, which would clear out that whole morning, but we basically hit all the stops for the ES. We're basically getting all the stops on the SPY. You need to keep in mind that all these orders, these are a bunch of buy orders. Buy orders are packaged up and given to bears. So these guys are going, well, do we want these orders? Is this a good idea? Should we consume all the liquidity that just got created here? And looking at tension, we got a +2%. That's really close to zero. And on Monday, I think the market's going to want to answer the question we were trying to answer all day before we so rudely interrupted. If the bears can manage this. So I think on Monday, probably this is still in the game plan. So we wiped out all the people, sure. But now there's this upside mentality, I think, in the market. Say, well, let's go test that. See if the bears can pull it off, which could justify a move up even higher until we get that zero test 30 minute there. So I would not sell this into the close. No way with this intention going on. And today's structure trash for the bears. The bears were just trashed today. They just immediately failed and did a terrible job misplacing algorithms, fell apart, got turned over by nobody. Awful. Terrible performance, bears. So we're wiping everybody off the table right now. So I think Monday expect a tension zero test. Expect that to happen. Expect it to ask some serious questions of the bears. I just don't think that we have bearish fundamental market. There's inside the market. If you're looking at, I don't know, you look at a lot of different things, I guess. The things I look at, I don't think that we're seeing a situation where, well, this is the question I ask. We're not seeing a situation where capital, I can never remember. Cash, since I can't remember which ones. Cash wants to leave the US. This is what matters right now. Not earnings. Nobody cares about earnings. Nobody cares about earnings. We care about whether the money during pandemic time wants to be in the US or if there's another country that's burning down in a more spiffy way than we are. Which country has more cash being pumped into it than the United States? Every country is suffering. They're all burning down. So which one has a couple $1 trillion? The United States is the only one. The Federal Reserve refused to inject that much cash into any other country, which is a total bias thing. The Federal Reserve totally cherry-picked the United States and unfairly injected cash here. They didn't do it anywhere else. So if the whole world's burning down, but they're burning down with $1 trillion, or more like $10 trillion now, that's where you invest your money. That's what this is all about. The market's just like, where's the best place to die? And what's here? And once the pandemic goes away, the U.S. markets are going to be through the roof. And then the cash, as soon as a country comes out and says, we've solved the pandemic, everything go back to normal, the U.S. financial market's going to go, because the cash is going to go back to their native countries, out of the U.S., and invest in their markets. That's how it's going to work. It's how it's going to work. So until that changes, someone in a country that's being hit with pandemic stuff. So you go, should I invest here or should I invest in a country that's also doing what we're doing, but trillions of dollars? It's a no-brainer. You jump on the bandwagon. That's what's driving us up. And I think people vastly misunderstand how big trillions of dollars are. When piles of trillions. The next biggest was like 50 billion. It's not, wasn't, I think if you're a huge hedge fund and you're willing to trade anywhere on the globe, it's a no-brainer. Somebody's going to put a couple $1 trillion into it. You saw what Bitcoin did when Tesla said they put 2 billion in there, 2.5 billion, shot it through the roof. And everyone thinks the market's going to crash. And I'm like, The real question is, how is the United States going to make sure that any foreign investment capital to leave the United States carries the liability of a market crash? In other words, how do we set it up so if you try to close your position, you lose all your money, and the United States gets to keep all the profits? You're not allowed to keep your own profits. That's the question. That's the one I'm not sure, but I'm waiting for Biden. I'm waiting for Biden to sign that executive order. You know, he likes to sign things. He can still write his name, which is good. You know, he can still write his name. So he'll still put it on whatever they put in front of him. Once he signs his name to, foreign investors take a 50% hit on their profits if they pull it out. Boy, that's really cool, because that means the United States gets to keep all that money, and your foreign investment over the pandemic was stupid. You just were helping us. Sounds like something that might happen. We'll see. Maybe it'll eke out in the housing market again or something like that. Maybe there's variable interest rate loans that we've given to other countries that we can shoot the interest rate up if your investors close. If we see your investors take money back to the US, we'll spike your variable interest rate loans. I don't know. We did it to Greece. We'll do it again. So that's what I'm not sure, but yeah, it's kind of my thoughts on it. I'll get you some chocolate milk. All right, so this is basically done. I mean, we got up here, we're getting up, 39.25 is going to clear out everything from before, so we should reach that. Watch for a pop through it as people dump their orders. Outside of that, I don't have a view for anything continued past here other than the things that I just said about what I think about the pandemic situation. And that's just a generalization, a generalized bullishness on the US because, yeah, there we go, 39.25. Done. We hit all the targets we wanted. We just didn't get the bullish position that would have been awesome to have, because that would have given us a time to hop in, somebody to play with. It would have alleviated you from that stress of being potentially fodder as we retested it. But bullishness came in and bullishness won. Okay, so the thing to watch for Monday is this zero test. The thing we were trying to do today, that's still on the plate for Monday. So that's the thing that's coming up next. I don't see the bears coming in and pushing this down now after this. But we're gonna need to trap in bears again. So on Monday, on Monday, you need to see some bears trapping again. We need to see bulls position and take them out. Those bears, if the bulls want to pump this, to pump tension, you have to capture the counterparty. So right off the open, first hour, say, where are the bears? See them again. It was just like today. Where are the bears? They pop in, they fail, and then the bulls showed up. Same game plan, but we're closer, so it's going to happen. We're going to get that zero test right off the open. And I think the bears are going to really hate what's coming, like a lot. Especially the ones who think that swinging short from up here is super, super safe. Yeah. Anyway, all right, guys. I will be back on Monday. I hope that this was useful and kept anybody out of trying to sell this market. I hope that I never said anything that said you should short. I I felt like I have been nothing but bullish all day because of the way it's. Hopefully, I didn't misspeak and say you should sell this down or something. I never meant to. I try to be pretty clear about that. So hopefully this was useful and helpful and did great. So, oh, okay, Tuesday. Oh, it's President's Day. Ah, that's right. The kids get out of school. I didn't even think about markets, so I'm always coding stuff, Joe. You know that. Okay, Tuesday. Next time the market's open, I'll be back. See you guys.